All right. Hello, everybody. Welcome back to another episode of The Market Close. I am sorry the audio is not going to be as good as it was in the morning. We are in the actual studio, which is not fully audio proofed like the studio that we were in this morning. So hopefully the audio is not too crazy for everybody. But we're live. And my, oh my, what a day it has been since the market open. A bunch of headlines we had during the market open have continued to persist at the level at which we saw them during the market open. And the main ticker I'm talking about right here is Octo, which at one point was at $83.12. We saw it in the morning when it was at like $10. This is the Tom Lee new crypto treasury for WorldCoin, which is Sam Altman's cryptocurrency. Dan Ives is the chairman of this company. It's down back to 46. So if you bought at 83, unfortunately, you're down about 50%. But if you bought in the morning, you were up about 3,000%, which is quite incredible. So we'll talk about that, implications of that. Tom Lee did give us some more analysis on what's going on with this company, and we'll talk more about that. And then Hoodie, 117, baby. It would be so nice to get that 117 close. We got to 117.12. Even if we get a 116.50 close, I will be very happy. Robinhood is up 15% on the day, $15.70. Obviously incredible to see based on the S&P inclusion, and that's why you're getting some momentum right here for Robinhood. Broader S&P, flat on the day. I'll take it. Another day in September where we're not bleeding red, but we're holding on to the green. I like that. Tesla is down on the day, down about 1%. NVIDIA was at 170. Now it's at 169. We got an NVIDIA headline as well that we'll talk about once we get into everything. Grab holding on to 520, not that bad. Google goes red. I don't know why that happened. It was almost at 240 in the morning. Now it's at 234, but still Google had a monster move since last week. So I think most people will take it. Amazon right there, 236. Meta, 756. Salesforce, 251. You got Reddit right here at 231. That's down about 3% on the day. Bitcoin's at 112,000. Ethereum is at 4296. BMNR is at 4380. It was at 4450. Again, we'll talk about the implications of BMNR investing in Octo, which is this new crypto treasury. But the stock has not had a massive move today, even though their investment is up like almost $1 billion, which we'll talk about. But it is up 4.3% on the day, which is not too bad. And then Palantir right here, 156.35, also not the worst thing in the world. So let's get into it. Thank you, everybody, for being here. We got a bunch of stuff to talk about on this market close. Real quick, before we get into it, I did end up having a meeting with the person I told you this morning. This was Sequoia's Andrew Reed. They were the Series F lead on Robinhood. This is their New York City office. This is part of the reason I moved to Jersey City is so that I could be closer to New York City. And when you're closer to New York City, you can kind of take a lot more of these meetings and get to network with some of these people. We had Vlad commenting under this tweet as he saw one of his newest investors, that's myself, and one of his oldest investors, Andrew, shaking hands with each other. He said in NYC, taking some notes from the new Wall Street. It was a really awesome discussion. This guy was the guy that convinced Sequoia to invest in Robinhood. And they came in they didn't come in like super late. Series F technically was like the latest round for Robinhood in 2020. So they weren't like in there in like 2015. But nonetheless, he was the one who was like, dude, retail is big. And like, you can't undermine what's going on with retail. Again, Sequoia, storied venture capital firm. They led Apple, Google decades ago. It looks like Robinhood may be on the trajectory to become one of their most storied investments as well. And both of us got to invest in Robinhood under a $10 billion market cap. So pretty cool. It's kind of wild that a VC in 2020 invested under $10 billion, and then a retail investor, because of the inefficiencies of the market and the 2022 drawdown, also got to invest under $10 billion. And so really cool to kind of see VCs and retail come together. And again, his argument was just, hey, retail is a force that can't be messed with. And that's why they've had their stake in Robinhood. So that's what we got on Hoodie, 117. We'll see if we can get that closed. Let's talk about what's going on with Octo. So this company, again, for those that don't understand it, it is a crypto treasury based on WorldCoin. That is the cryptocurrency that Sam Altman has developed. I think a lot of you guys have heard about it before. Biometric sensors in your eyes and stuff like that. I really don't fully understand the coin itself. The current position on BMNR, which put in 20 million this morning, is now worth 675 million. At the time when Tom Lee quote tweeted my tweet and kind of gave a little bit more analysis, it was worth 1.1 billion because BMNR was like $80. And so they bought 13.7 million shares of Octo at $1.46 a share, 20 million in total. And at the time that he posted this, it was worth 1.1 billion. It's not worth 1.1 billion anymore. I don't know if it's going to continue to be worth anywhere near that level. I don't know if it's going to be holding this 3,000% return that it's up right now, 51.41. But here's the question I want to ask everyone in the chat, because quite frankly, I am confused on what the heck is going on. I saw this news this morning and I was just like, I get it, but also I'm not sure if I fully get it. So here's the question: bullish or bearish Octo? And bullish means you think it is going to be able to hold a multiple. Bearish means you think it's going to dump. And if it dumps down to like $10, that's still a 5x from when, a 10x from when Tom Lee invested, or basically like a 7x from when Tom Lee invested at 146. But if it dumps to $10, you know, that's a pretty nasty drawdown from 50 for all of the retail investors who are buying it at these levels. So from my understanding, BMNR is not trimming their position. I think this is a long-term hold for them. I think, you know, that's the whole reason they got into this, to kind of support the Ethereum ecosystem, because WorldCoin is building on ETH, and then Tom Lee's buying ETH. He's then buying companies or investing in companies that are building on ETH. So that's where I understand the bull case of this. But guys, it's just not normal for a stock to be up 3,500% in a day. Like, obviously, like just as an objective market participant, that is not normal. And usually when that happens, which it happened on BMNR, when it went to 160, the day it was introduced from $4 and it came all the way back down to 27. Now it's at 44. And the reason it's at 44 now is because it's, you know, it has a little bit of a premium above its net asset value. So BMNR's price kind of makes sense right here. 8Co, I don't even fully know how much WorldCoin they own. I mean, their multiple is like upwards of 30, 40x of NAV. That's probably not that reasonable. So I don't know what's going to happen here, but Wall Street's bidding it up, or maybe retail's bidding it up. Someone's buying it. Volume on this bad boy is, I believe, above 200 million at this point. It is 198 million, so just under 200 million, and it's up 3,000% on the day. BMNR's Octo position is locked up for the next 30 days. Okay, so there you go. So they definitely can't trim for the next 30 days. And it seems like they're going to have to hold on to it, whether it goes up or down, and we'll see how that plays out. Let me know in the chat if you bought or sold any of this, or if you bought it and sold. I had a bunch of people on Twitter messaging me that they made like 10,000, 20,000 based on trading it. I mean, this obviously has been a momentum-oriented play on 8Co, and the momentum has gone up, the momentum has gone down, but still up 3,200% of the day, which is quite incredible. Robinhood right here, 117.17. We got about 7 minutes until this market closes. Let's see if we can close above 117. Again, the bear case to this is a crypto treasury, investing in another crypto treasury. A lot of people think it's kind of scammy, doesn't make a lot of sense. The bull case is if WorldCoin has utility, it's building on Ethereum, it makes sense for a company to invest in another company, given their main asset is Ethereum, and they're investing in a company that's building on top of Ethereum. Just like any VC fund would invest in a company that they believe is utilizing a technology that they are bullish on and they believe has a future. But like, I don't understand the utility of it. I don't understand the multiple on it. And I don't really know, is Dan Ives, who's now the chairman of the board, going to be talking about this company every day? Is he going to be hitting the ATM to dilute shareholders to buy more of WorldCoin every single day? Like, are they going to just use the BMNR playbook on this? I don't know. And if they are, I'm not saying it doesn't make sense. I'm just saying, does WorldCoin have enough of an ecosystem where, like, doing the crypto treasury on Bitcoin makes sense? Doing it on Ethereum makes sense. Doing it on WorldCoin, does it make sense? I don't know. I don't know. And so I'm not in it. I haven't traded it at all. It does seem kind of weird, though. I'm not going to lie. And I do think it can do well. I just don't know if it's going to hold a 3,000% gain. And so we got to see. Maybe it does. Maybe that's how the market thinks of it, especially if there's utility on WorldCoin. But I think we're going to see how that plays out. Robinhood right here, 117.25, going on 16% on the day. Absolutely incredible. And hopefully in the next 5 minutes, we are going to be able to close above 117. Okay, this is the NVIDIA news that I found out from Tanner. NVIDIA executive says they have received H20 chip licenses from several key customers in China. There you go. So China sales, as Tanner says, are not factored into guidance. Blackwell has not officially been approved by the United States yet, although Trump said he's open to doing it. Trump and Jensen will be going to the UK together later this week for some event. I don't know what the event is. They're going to be meeting with a bunch of politicians there, some state assembly event. I would imagine Jensen's going to be talking to Trump and saying, hey, can we get Blackwell into China? But that is bullish. Now, NVIDIA didn't really move too much off this news. I mean, it's up on the day. It was at 170. Now it's at 168.42. But it's nice to see at least some of the H20 momentum in terms of chip sales will be coming back to NVIDIA from China. If BMNR doesn't sell at least half their shares after this run-up in Octo, then the board is going to have some explaining to do. You know, it's a good question if they even will, because technically their whole goal is to support the Ethereum network. And the point of this investment is to support like Octo that's building on the Ethereum network. But also it's like, dude, you're up 5,000%. So it's like, trimming even a little bit would make sense for BM&R shareholders, unless Tom Lee thinks that this Octo thing is going to continue going up as much as it's. I don't know, dude. This is a bit confusing. I woke up and genuinely I was perplexed this morning. I really could not understand exactly why, and that's mainly because I have no idea what WorldCoin is. And maybe I need to do a lot more research to understand how valuable it is, but it feels a bit aggressive across the board. And I think a lot of people are going to be asking some questions on kind of ultimately how this plays out. But again, yes, they can't sell for the next 30 days anyway. So we got 30 days to see how this price materializes. And there's a world where Tom Lee thinks it obviously doesn't deserve to be up 3,000%, but it probably doesn't deserve to be down at $1.46 from where BM&R shareholders bought. So even if this thing, again, goes down to $10, whoever's buying at 47, you're going to feel upset about it. But are BM&R shareholders going to be upset about it? No, because if it's at $10 and BM&R put in 20 million at $1.50, okay, boom, you're still up 150 million bucks. As a BM&R shareholder, I own BM&R, not 8Co. If this thing goes to, as long as it doesn't go back to $1.46, and even if it does, then okay, we're break even on the investment. It's like no harm, no foul. But if you're investing in 8Co, I mean, then if it goes down to $1 from 47, you're going to feel pretty upset, right? So I don't think it's going back down to $1, but I think for BM&R shareholders, you're in a decent spot where even if it collapses, given he got in so early at $1.40, it's likely not going to be, the worst thing in the world for the stock. Now, a lot of people have been asking, why isn't BM&R up a lot more based on this Octo investment? I think it's because the market just doesn't fully understand it yet. And I don't think the market believes that Octo can maintain its premium. And if it can't maintain its premium, then why would you give BM&R like an extra 0.2 on the NAV because they're up $600, $700 million if you don't think that premium is going to last in the first place, versus Ethereum where, people are Wall Street's a lot more understanding of it. So we got to see how that ends up playing out. NVIDIA right here, still up a little bit on the day. You do got some red candles right there from 169 to 168.30. SoFi goes green on the day. It was red in the morning. That's up about 1.3%. AMD 151, and then the S&P 648.64. Why are you guys saying NVIDIA is tanking? NVIDIA is not tanking. I get that it's down from 170 to 168, but that's not I see the red candles, but that's not like tanking. I don't know. It's algos at the end of the day. This H20 news seems to be pretty bullish to me. I don't see any other headlines that would be some massive bearish news, but no, it's getting sold off towards the end of the day. That stuff ends up happening in the broader markets. But I'm just happy NVIDIA's, not tanking below 160 because it was on the trajectory for that last week. And it looks like we got some headlines this morning. It seems like it's not going to be the worst in the world. Yeah, 2 to 3% is not tanking. I get it's not at 170 anymore. I wouldn't say it's fully tanking. Where is ASTS? That one had some news with SpaceX and the merger this morning. ASTS only down 4%, not too bad. So that was down about 15% if anyone bought that dip. Looks like that one worked out. HIMS right here, 49.80. Uber right here, 94.18. And then Hoodie. We got 2 minutes, folks. I know I haven't rang the bell all day because I forgot the bell in the studio this morning. I have the bell with me. It is going to be an extra long bell to celebrate Robinhood getting into the S&P 500 because I didn't ring the bell on Friday either because I didn't have it. And closing at 117, which would be very exciting to see us get there. Yeah, giving up some of the gains versus tanking. I think not tanking is the broader terminology there. Octo's about to dilute on so many people. I mean, yeah, that's probably also the function of their business, right? They're a treasury. They kind of have to dilute. So there's a lot of confusions with Octo, bro. I don't fully understand it. And I think over the next coming weeks, we'll have a much better understanding of what the heck's going on. But as of now, I kind of just reserve the right to learn more about it, but I'm not in it. If you're in it, that's fine. And if BM&R is in it, if that stake goes back down, I think that's fine. I don't expect the 20 million to turn into $1 billion in one day, but I think it will be worth more than 20 million. So for BM&R shareholders, I think it is worth having the investment. All right, 20 seconds. Here we go. 15.7% on the day. This has been one of the most exciting stories in the market. Generational company. It's a company that no one believed in 3 years ago. They went through hell after the GameStop situation. Vlad brought them back. And today, they are now a top 500 company in the United States of America. Here we go. Monday, September 8th, 4 p.m. The stock market is now closed, and Robinhood closes at $117.28. Congratulations, everybody. Robinhood now in the S&P 500. There we go. There we go. Congratulations to everybody. Congratulations to Jock this morning, who said that he took a peek of Robinhood when his wife was in labor. on Friday, saw the spike on the screen and knew that we were in the S&P 500 and then went back to helping his wife. I mean, that story itself was just so epic. I mean, there's so many stories of people that have been following this company for so long. And there you go. Very, very exciting stuff. Not an all-time high for Robinhood. We were at around these levels about a month ago, and then we get it down to the $100 range. We got a big trader summit coming up. We have banking coming up. We have a bunch of different catalysts. I think Q3 is going to crush it. Obviously, I think August was an incredible month, and September so far, a weekend, is not that bad. So we'll see how that turns out for Q3. But yeah, I think it deserves the momentum it's getting. It deserves the growth, and obviously 15% up on the day is likely because most people believe that S&P 500 will be a massive catalyst for Robinhood. So there you go. 117.24 on the day. Palantir, nice 2% on the day. 156. Tessie, 346. That's down. NVIDIA, 168, which tanked at the end of the day. But that is still up about 0.69%. S&P 648, not 684 yet, and maybe by the end of the year. That one is relatively flat. AMD 151, SoFi 2588, Google 234, Grabby Grab 520, not too bad. MicroStrategy 329, ASTS 40, Uber 9350. Where was Oscar? Did it close above 20? It did indeed close above 20. Congratulations if you're an Oscar, up about 4% on the day. Lemonade 5318. That was down in the morning. That's up 5.83%. Not too bad. UNH, that one 320. We haven't seen 320 in a minute on UNH. So not too bad for UNH also getting this momentum. Yeah, Robinhood's all-time high. I'll give you the exact number. I believe it's in the 118 range. It is what is their all-time high? 100. Is it 118? Hold on, let me check. Did we hit it today, 52-week high? I don't think we did. I'm pretty sure it's 118. Robinhood 52-week high is, oh no, I think we did hit it. 52-week high says 117.70. Did we hit that today? No, today's high was 117.30. Okay, so we still have not hit all-time. We're 40 cents away. I thought it was 118, but 52-week high was 117.70 about a month ago. 117.30 is where we closed out. So yeah, 117.70. Not officially hit that today. BMNR, where did that close at? This one, 43.86. Let me know if anyone bought or sold any stocks today. Let's put in the chat if anyone bought or sold anything, sold some puts, sold some calls, bought anything. Grab right here, 520 again. Reddit 230. That one was down about 4% on the day. And then DoorDash 250. That was up 1.5. NVIDIA 168. I don't think we have any earnings today, but let me confirm. I think we're pretty much done with earnings. Today is what, the 10th? No, today's the 8th. Yeah, nothing today. Tomorrow's GameStop and Oracle. Oracle's a big one. And then we have Adobe on Thursday. And outside of that, that's what we're done for the week. All right, I got some NVIDIAs. I got some hoods. I got people saying I sold some of my hood to make some profits. Not too bad. 50 more shares of BMNR. Oh, Open Door did take a little bit of a beating today. Now, look, this is expected. I mean, Open Door ran up to like 730. It's down 10%. Like, that's not that big of a deal. I wouldn't read too much into the intraday price action of that. However, they have officially woken up one of the biggest shorts in the market, which is Martin Shkreli. And he officially has said, you're an idiot if you're investing in Open Door. Open is an obvious short, and anyone long should never, ever invest again. I wonder how deeply the Open Door community will go at him and will, argue about him and like fight him. I can tell you one thing about Shkreli. He doesn't give a shit. I mean, he has no emotions about any of this stuff. So I guess it's Eric Jackson versus Shkreli, and we'll see how aggressive that becomes. But nonetheless, this is Shkreli. I don't know if he actually took the short. Some of you guys that might follow his stuff, I know he was like streaming about it, so I don't know if he took the short yet, but he is saying that he is now short. Some people said they sold some hymns. Some people bought some gold. I think gold hit all-time highs this morning as well. Sold some hood calls, got some premium. Grab, Archer, BMNR, and Misty. Trimmed some NVIDIA. Sold some covered calls on hood. I don't hate selling covered calls on hood here. 125, 130 a month out. Like, if it gets there, great. You can manage it. Do I see hood going exponential, like 145, 150, where even a 125, 130 covered call is smoked? I don't know, dude. Is it possible? Yes. Am I expecting that? No. But if it happens, great. You can manage that covered call. You can roll it. You can have that position. You can have it as a hedge, even if it's underwater for the next couple months in case there's any dips or anything like that. So I don't think it's the craziest thing in the world. If you had calls, like I have 110 for 926 that I still haven't rolled yet. I'm probably going to roll that up to like 130, 125 for January 2026, which I think is reasonable. So I don't think it's the craziest thing in the world to have some of these covered calls. You just have to be able to manage it. A bunch of you guys are saying you bought some end phase. Okay, interesting. And phase again did get kicked out of the S&P 500. How is quantum doing? I haven't looked at quantum in a minute. Let's look at some of the main quantum names. D-Wave, QBTS, that one, 1540. Okay, relatively flat. Rigetti, probably at 15. Yep, that one's flat. And then IONQ, 41. Yeah, so a lot of these names haven't really moved over the past couple months. Robinhood, 117.42 after hours, 30 cents away from all-time highs. We're going to see if that one can continue. Muckabee, thank you for the $5 super chat. Your take on Oracle earnings tomorrow, bullish or bearish? Okay, so I am very bullish Oracle. I talked to someone at AIPCon who works in the data center tech industry, and he said, I think I told you guys this on Friday, he said his number one bet is Oracle, taking away a lot of market share from some of the hyperscalers in regards to cloud, or at least, working more intimately with them. However, the stock has run a lot, bro. And it's like, I don't know. Oracle year to date is up 43%. This is not some $10 billion company. This is a $700 billion company. From the lows, it's more than doubled in April at around 128. Like, I think they're going to put up some great numbers. And, their AI revenue growth was like 80% last quarter. They increased fiscal year 2026 guidance. Everything they needed to do to get the stock to be up basically 45% year to date, they did on the last quarter. They're going to have to top that to get this to get back to like that 250 high that it was at a month ago. And I don't know, I wouldn't bet against them, but is the risk reward of buying Oracle before earnings the best? I really don't know. I think long-term in 5 years, you'll be happy owning it at this price, but for tomorrow, we got to have to see. So you got Oracle right there, up 45% on the day, and we will have those earnings for that tomorrow. Duck says, I doubled my Nebius position today. How did Nebius and CoreWeave do? They were a little bit down during the morning, and I think they pivoted. Nebius right here, down about 1.94%. CoreWeave, up about 4.78%. Intel announces leadership changes. Okay, so you have a couple of people that are leaving Intel, a bunch of new people that are coming in. The United States has taken an 8% position into Intel, so I would imagine they're going to have a little bit of a mix-up to try to figure a lot of this stuff out. 24.50 on Intel. Intel really hasn't moved since the U.S. took a position. I mean, I think it was at 22, so it's up a couple bucks, but it's been trading around 20 to 24 for the better part of 4 or 5 months now. So not too much of a change right there on Intel. I am not buying Oracle. I do not own this one. I own NVIDIA. That is kind of my core data center semiconductor exposure. I know Oracle is not literally semiconductors, but it is in the data center space. I just I think anyone buying Oracle here 5 years from now will be happy. I don't know tomorrow if you will be happy. Broadcom already was at an all-time high, and Broadcom said, hey, we're going to get another $10 billion of revenue that we've never told you about because we got this brand new customer called OpenAI that wants custom ASICs. That's why Broadcom went up another $50. I don't know if Oracle's going to have an announcement like that. By the way, Oracle already has another $30 billion deal from OpenAI that they announced last quarter. So it's not like, I don't think OpenAI is giving them another $30 billion, right? Like, could they announce another deal like that that is so monumental that the stock at all-time highs has nowhere to go but up? I don't know. We're going to have to see. But I do think long-term Oracle should be okay. By the way, speaking of NVIDIA and Broadcom, I found this clip this morning of Jensen talking about ASICs. Here's what he had to say about ASICs. Again, Jose gave a really good TLDR on ASICs versus GPUs. Essentially, ASICs are very custom chips for one use case. GPUs are more broad-based, more general. That's why Jensen is going the GPU route versus the ASICs route, because he can sell more, bigger TAM, bigger opportunity. It's not that ASICs are bad. It's just that that's not what NVIDIA is focusing on. The street has NVIDIA down from 185 because they think now Broadcom's some massive threat because ASICs are going to destroy the market for GPUs, when in reality, the market is just massive. And here's what Jensen had to say about a month ago when asked about ASICs versus GPUs. Let me make sure the audio is not muted because I was an amateur this morning. And okay, now we should be good.
First of all, a lot of ASICs are started. Most of them are canceled. And the reason for that is what's the point of building an ASIC if it's not going to be better than the one you can buy in some very specific measure? And we're moving so fast, and the bar that we're raising is so incredible. It's not easy. It really isn't easy to build. If it was easy to build a Blackwell and say, hey, I got 14 guys here, let's go build a Blackwell. If it was that easy, well, gosh, I don't know why I'm working so hard. Doing this for 33 years and it seems harder than ever. And then somebody goes, yeah, I'll do an ASIC. And so I'm delighted to hear everybody's interested in building ASICs. All right. I do believe most of them are going to get canceled. However, many of them have approached us about using NVLink. And they're important people to me. You know, the person who's asking me is not a stranger. You guys know that. This person asking me is somebody who said, hey, Jensen, listen, we got a whole bunch of your NVLink systems. We have a whole bunch of your chassis. We standardized on everything here. If we had NVLink, we could put our CPU in it, say, we could just use the same chassis, extend it, and we'll buy everything else from you. We'll buy everything else from you. And you know that last part, we'll buy from you. You got me. You buy from me. You kidding me? Of course. The person who's asking me needs help. NVLink is a good thing. NVLink Spectrum X connects into an ecosystem that I care about. You know, I care about Doka as much as I care about CUDA. I care a lot about Nixel as much as I care about Nickel. These are all APIs of NVIDIA's that are really important.
So you guys get the point. Jensen is not concerned or worried about ASICs. And so, yes, the video was at 1.25x, so it was a little bit faster than normal. But I don't know, dude. Like the downgrades we saw in NVIDIA this morning by Citibank because of Broadcom, it feels a bit ridiculous. And it feels not only short-sighted, it feels like a knee-jerk reaction by some bank that just like wants to downgrade it for the hell of downgrading it. When in reality, this is a massive market. Broadcom's going to do great. NVIDIA's going to do great. And I don't think there's like this huge commoditization going on of the overall GPUs. So I think, we'll get more updates in the future in terms of what's going on with NVIDIA, how they're navigating this market. But it doesn't seem like Oracle getting or Broadcom getting $10 billion from OpenAI is like bearish for NVIDIA. Okay, let's talk about Klarna. So I know a lot of people have been asking me about this. I did a little bit of due diligence on Klarna today to try to get a better understanding of their market. I'm not going to be buying the IPO. However, one thing I learned about Klarna today, and very curious what kind of people think about this. I didn't know this. Okay, so buy now, pay later gets a bad rap in most of our psychology, the way we all think of like the product, because buy now, pay later is like, okay, these people are never going to pay it back. Buy now, pay never, right? So it's like these companies have massive delinquencies, all this stuff. I did a bit of research today, and 77% of Klarna's revenue is from the merchants. It's not from the users, right? It's not from the individual people that are actually taking out these loans. Their average loan is 40 days, and 30% of people pay in full immediately. So it's one of those things where credit cards are incredibly predatory because you can have a revolving balance at like a 30% APR, and the credit card just continues to charge you interest. Klarna and a lot of these buy now, pay later companies, if you don't pay, you're cut off immediately. There's no like extra interest on top of it. Like, and there is interest for like, if you're taking out like a 6 to 18 month loan, but if you're taking out like a 40-day loan or a 2-month loan, most of it, there's no interest for the consumer, which is why consumers love it, because they just get to split up their payments, but they don't have to pay interest on it versus a credit card. Whereas the merchant gets more volumes and transactions versus margin, which is why they get more conversions and they're likely to, take on the adoption of a product like a Klarna. So yeah, a bunch of you guys are saying in the chat that you use it. Sean says, I use it. I pay in 3 installments. Really good. Sweden, I mean, it originated from Sweden. It's like 83% of 83% of people have used Klarna inside of the country. It's been there for the past 20 years. So look, I think it's going to be one of the more exciting IPOs because it does have a brand name that international investors know very well. By the way, I forgot about this when we covered this a couple of weeks ago. Walmart ended their partnership with a firm, and they started a partnership with Klarna, probably because Klarna gave them a really better deal, which probably hurts Klarna's margins. But the point is, Klarna is now going to be integrated into one of the biggest retailers in the country, Walmart, and start to become more of an American brand, given that most of their brand affinity is in Europe. So look, I'm not buying it, but I wouldn't say it's crazy to take a stab at it, especially if it gets a little bit of a juice from IPO. It is seemingly already oversubscribed based on some of the stuff I was reading. Fundamentally, I don't know, how the company is going to grow and deal with any macroeconomic headwinds or tailwinds, but like, I think it's going to have a good IPO, and I think it's one of the better brands that are out there. So we're going to see how this one ends up playing out. You guys are posting some stuff about Octo. Do we have some insider selling right here? Octo, former CEO filed to sell 208,000 shares for $10 million. Okay, so I don't know who the former CEO is. Honestly, I don't even know what company Octo was before Tom Lee turned it into this WorldCoin crypto treasury today. But that guy just got a massive payday because he did nothing and he let Tom Lee build out this crypto treasury. You got a little bit of a red candle after hours, 43.50, still up about 3,000%. And he just made $10 million. Does anyone know, did anyone do any due diligence on what Octo was? Like, what is the name? 8Co? What is this company? Just like Bitmine was a Bitcoin miner and then, they turned it into this ETH treasury. 8Co, this is their website. 8Co is a technology company that is dedicated to driving growth and innovation through strategic acquisitions. Has it always been kind of like a blank check company? I have no idea what this is. 8Co Holdings. Maybe it wasn't an actual company, but maybe it was just like a holding company to merge with another company in the future. Dude, I'm not going to lie. As much as I love Tom Lee, I saw this news this morning and I really didn't know what to make of it. Especially Dan Ives is the chair of the board. Like, I love Dan Ives as well, but I mean, how much does Dan Ives truly understand about like human identification and WorldCoin and like proof of human? I don't know, bro. I just I don't fully understand it. So we're going to see how this one ends up playing out. My gut tells me it's going to be hard for them to hold a 3,000% one-day return. Again, if it goes down to like $10 for BMNR, that's totally fine. But for people buying it at $43, $45, I think that, if it does go down, it's not going to be pretty. Because I just don't know realistically why it deserves to be trading at these levels. But maybe there's more about WorldCoin that I don't fully understand. So I can understand how people think this is frothy, all that. Like, I get it. I totally, which is why I didn't buy this today. I didn't chase this. I don't know if WorldCoin actually has some massive utility that deserves to create. Like, I think a lot more of these digital asset treasury companies are going to start to exist, DATs. And the question is going to be, which are the good ones? The Bitcoin ones make sense because I think most of us understand the Bitcoin bull case. The Ethereum one makes sense. A lot of us are getting educated on the Ethereum bull case. All these random coins turning into a treasury, I don't know which ones are going to make the most sense, which ones are the best. Maybe WorldCoin does, maybe it doesn't, but we are going to have to see long-term how the public markets think of these treasury companies. And if institutional investors are also waiting to get this type of exposure, if they're embracing it, if it's not just a retail phenomenon, because I kind of don't think it's just a retail phenomenon. I think the institutions do want a certain type of exposure to these types of assets. The question is the underlying even useful? And that's what we're going to have to see over the coming weeks and months based on these crypto coins. Let's listen to Julian Emanuel from Evercore. This is what he had to say about what's going on in the stock market. Again, he put out a note last week from Evercore ISI about the potential for the S&P 500 getting to 9,000 by 2026 in terms of an asset bubble. Here is his argument on what's going on in the state of the markets.
Near-term pullback is a buying opportunity, especially for AI-driven leaders. So here with more is Evercore's Julian Emanuel. We were speaking about this earlier on the show. I don't know if you had a chance to listen, but for so long, AI seemed like a buzzword, and all you had to do was just drop it here and there in an earnings call, and you got a little pickup in your stock price. But now we need to really see some of those gears turning. We need to see what it means to actually be capitalizing on AI. What should we be looking for here, even if you see some choppy movement before we really take off?
Yeah, and look, again, if you think about it within the context of the last great technological revolution bull market, the internet of the late 1990s, choppy movement is part of the script. And so in that respect, considering we've gone up almost uninterrupted since the April low, which itself was a scary chop, we know, it's to be expected that we might have a little bit of indigestion, particularly September into October, when we've got uncertainty. We're going to have a payroll revision number tomorrow that everyone is sort of focused on. And again, the inflation figures, tariff rulings from courts, all of these things together. But what we're looking for specifically is the continuation of this dialogue from corporate America in general that we've heard for the last several months, that they're actually becoming front foot on talking about how they're using AI to generate revenue, not just the cost save, it's the revenue generation. And you're seeing it across industries. And for us, that really bodes well for the setup into 2026.
It's interesting because Sherry Paul from Morgan Stanley was on earlier in the show, and she said, yes, of course, there's tariff noise. There's other macroeconomic uncertainty. You're talking about CPI and PPI and maybe a jobs revision. But she says that doesn't really matter so much because innovation is where it's at. You got to stay focused on AI. But you're sort of saying, yes, but we could be choppy getting there because of those macroeconomic headwinds. But basically, you're saying, hold tight, use the opportunities.
We are, because again, going back to, and if you think about sort of February, March, and April, great bull markets, and this is a structural AI technology-driven bull market, great bull markets find ways to try and to get investors to get off the theme, to do some selling. And our feeling here is you don't do that, because basically, when you think about it, what really drives stock prices higher in the long term is earnings. And we're very optimistic on earnings into 2026.
Okay, so you talked about revenues. Now you're talking about earnings. Can you give us some more specifics? If you're someone that doesn't know that much about the AI trade, you just know it's the future, but you're also maybe a little worried it's a bubble, because you also talked about sort of that bump that we felt in the late 90s when we saw this last big internet revolution. What should you be looking for as you're choosing your investments on those dips for AI?
Well, I would say the default is always, and this is sort of the natural gravitation of the AI trade itself, is that the index weightings have become much more convex to the AI theme. So that's sort of a good way to think about it. But again, there are companies who in their conference call transcripts have been very public about how they're using and deploying AI. And importantly, and we like these types of screens, not only are their valuations reasonable based on their last 5 years history, but they have upward earnings revisions. In a tape like this, where there is some uncertainty, those are the kinds of safeguards that to us really are an extra edge.
And you have.
So as you can see, Julian Emanuel thinks it's pretty obvious that a lot of this earnings momentum is not slowing down. We'll listen to Dan Niles in a bit, who's a bit more bearish about kind of what's going on in regards to valuations. But upwards earnings revision is the kind of key argument to be able to claim, hey, like there is going to be valuation expansion. And again, that's how it should be. If there's no earnings growth, aka Lululemon, your stock falls 50%. If there's a lot of earnings growth, like in NVIDIA, your stock is up 40%. And so I think that's how it should be. Lulu, by the way, recovering. It was at 163 in the morning. Now it's at 167. And as long as that continues, that's why I think we will continue to see multiple expansion. But the growth has, my point is, the reason it's not euphoric to me, and we were talking about this in the morning, is that we're not having things go up because there's no growth, at least in the most important companies that matter. And in 2021, that was happening. So as long as that continues to not be the case, aka growth leads to momentum, then I think that continues the broader bull market. Now, someone who is in the United States Congress is not agreeing with the bull case for the argument. U.S. Representative Tim Moore bought $215,000 of TZA. TZA is a triple leveraged small cap bear ETF, aka if IWM goes down 1%, TZA goes up 3%. So Tim Moore, I feel like I've heard his name before. He represents North Carolina, 14th Congressional District of North Carolina. He is betting that small caps will take a hit. Okay. It is interesting. He didn't buy like a bearish QQQ or a SPY ETF. So he's kind of saying, I mean, to me, this is kind of him saying rate cuts are not going to happen. But the idea of shorting small caps right here into rate cuts, I'm not saying small caps have to be a big beneficiary of it, but theoretically, they should get some benefit. IWM right here up about 0.2% of the day. Looks like that's the trade that he's going after. PPI and CPI later this week. Again, we're going to see what happens with that. I will not be live for the market open or market close tomorrow, so we will not be able to see what happens. But we get PPI on Wednesday. I will be live on Wednesday. Thursday, we have CPI. I won't be live on Thursday, but we'll see what happens with CPI. And hopefully those pieces of data are good. If they're not good, then yeah, probably stocks take a hit. If they're decent enough for the market to kind of move forward, then we get through kind of the hardest part of September, that and then FOMC. And then after that, we got 2 weeks left. If we can get through it, then we get into earnings season. If we can have a monster Q3, maybe we end out the year in not too bad of a world. He's betting the economy is about to tank. So, I mean, this goes back down to the argument around the labor market. We talked about this a lot over the past, really since Friday. We've been talking about this on the Future Show this morning. Friday, we talked about it. The labor market is definitely something that I don't have a fundamental conclusion on, other than, hey, if we do have a really bad job scare in this country, hundreds of thousands of jobs down to the downside, we're going to have to cut rates, which is good. but cutting rates at the behest of the companies or of American companies, not employing people is not the best. So you need a labor market that's like relatively strong, but not too strong for inflation, but also not too weak for the economy getting hit. And that's a hard nuance to walk. And I don't know exactly how we navigate that. But, Besant's argument was, hey, if the labor market does continue to weaken, that means they are right about J-Powell being too late. And that probably means we're probably going to get rate cuts sooner than later. And look, a lot of these big firms are starting to say rate cuts are on the way. Bank of America, 2 cuts. Goldman Sachs, 3 cuts. JP Morgan says 3 cuts. Wouldn't surprise me if we get 3-4 cuts towards the end of the year, especially if the labor market continues to be ugly. I think tomorrow, if I'm not wrong, we get job market revisions for fiscal year 2024. Let me see if I can confirm that. And I think it's projected to be like 800,000 down. Did we get it today? Did we get it today? Am I wrong on this? I think this chart is from today, 2024. Yeah, negative 800,000. 2024 delivered the highest downward benchmark revision since 2008, nearly 800,000 jobs, right? This was today, right? If I'm not wrong, this data came out today, which means there you go. Market took that like a champ by getting that data. But 800,000 jobs that we lost in 2024, that's also just bad news for the labor market. You had negative 13,000 in June. You had 22,000 versus 75,000 in August. If that 22,000 number is even real, we'll see when that revision comes through. And now it looks like either this data came out today, I'm going to try to get the confirmation, or it's being projected for what we're going to see tomorrow. But it looks like there's going to be a decent revision to the downside. Is it tomorrow or is it today? Oh, it's tomorrow. It's tomorrow. Okay, so the reason for this chart is because of this number right here. Okay, so Bloomberg is projecting 818,000 negative for 2024. 2023 was negative 306. 2022 was 462. All right, so let's say we come in at like 500,000. That would be way better than expected, but still, that would be ugly. Now, if we come in at 1 million, that would be really ugly. So hopefully the market is willing to deal with whatever the data comes out to be tomorrow. But the worst case scenario this week is we get a really nasty revision, a really bad PPI, which, by the way, last month we had a horrible PPI. Market withstood it, but we did have a crappy PPI. And then we get a crappy CPI as well. We get 3 bad numbers in a row. I wonder if this week we're going to be able to hold on. But if two out of those 3 numbers are good, maybe 1 out of those 3 numbers are good, like CPI, and we can handle a bad PPI, bad jobs number, then maybe that's not the worst thing in the world going into the end of September. I'm a mailman, and I've seen more unemployment mail come in this last month. That's crazy. That is, dude, so many of you have anecdotally explained what you're seeing in terms of your own lives. And the fact that you're a mailman and you're literally delivering the mail and you're seeing unemployment letters is kind of wild. I believe it. I've asked you guys for months on how you guys think about the labor market, and unequivocally, like 85% of you have said, not in a good spot. So now some of the numbers are matching up to, jolts, we lost like 300,000 jobs and jobs opening. That, again, is a data point for why the labor market's not the best. So again, the nuance is, will the labor market be so bad that the actual earnings falls off a cliff and then kiss goodbye to these beautiful multiples that we've been having? Or will the labor market be okay, bad, but not like horrendous, and the rate cuts will be enough to be like a cushion for the falling labor market, which will also be good for growth stocks, obviously good for equities and capital allocation, because people are going to want to put their money somewhere else if they're not getting 5% in a money market fund. And the labor market doesn't fall off a cliff, which means corporate earnings are going to be okay. Like, that is what we have to kind of figure out over the coming weeks, and we're going to get a lot more data to see how that plays out. Is my voice good, guys? Is the echo kind of not that bad here? I'm in my actual studio. It's kind of audio proof. Like, there's a lot more foam that I have to put on the walls, but is it like better than like the first couple streams? Because if it is, then we're making progress. We're making a lot of progress then. And then I should be able to finish it up by next week, and we should be in a better situation. Here's what Dan Niles has to say. Again, a little bit more of a bearish take, but here's his perspective on what's going on in the markets. It's good? Okay, good. Okay, so when I get it fully audio proof, then I think it should be really crisp. So that's good.
Because there's always that concern that there's a pull forward, that the expectations were just being bloated to begin with, and that it will catch up with this trade.
Yeah, I think the tough thing is, don't confuse what stock prices are doing with what's actually going on fundamentally, because those two things can be completely different for short periods of time. And that's what you have going on right now. You were talking earlier about, the Fed cutting rates starting again that cycle on September 17th, and that's driving these stocks up. But if you listen to what is actually coming out from these companies, it paints a slightly different picture, right? Where, remember, there was an MIT study that came out that 95% of companies weren't seeing any improvement from their spending on AI. Then you get to company actions, which matter more than these surveys, and you go, all right, Meta, which has been absolutely killing it with their Llama models. Now there's talk that they're going to work with either Google or OpenAI to get Llama 5 out. And after spending Major League Baseball pitcher type salaries for AI researchers, they've probably now restructured their.
Guys, as we're listening to Dan Niles talk about valuation, Cognition, another AI company, has just announced they have raised at a $10 billion valuation. I mean, let's switch over to that real quick. This is incredible, dude. We had Anthropic last week at 183, and now you got Cognition. Let me know in the chat if you know Cognition. If you're a software engineer, you probably know them. I think they're kind of like a Cursor competitor, if I'm not wrong. They raised $400 million, $10.2 billion valuation.
Most interesting part here is not that you've been able to raise more money at a higher valuation necessarily, but since you guys acquired what was left of Windsurf, you have seen massive acceleration. Why did that happen so quickly?
Yeah, absolutely. No, it's been like peanut butter and chocolate, basically, having the two product experiences. And I think in code especially, I think AI has really taken off, and all of the best software engineers have already entirely changed their workflows. The two main product experiences that you really see for that are, one, the IDEs, which is what Windsurf is, and two, the agents, which is what Devin is. And now that we have that combined suite, we've just seen growth accelerating. We've been able to bring Windsurf customers onto Devin, bring Devin customers onto Windsurf, and also just continue to grow much faster.
Founders Fund led this round. 8 VC, Lux Capital, prior investors also participated, many others. When you were negotiating the funds and the valuation, how much was the sort of what you got for Windsurf baked into that conversation?
It's funny. And so we raised this round, just recently, but as we were doing the Windsurf deal in July, that weekend, I was on the phone with Peter, kind of giving an update on the business. And
Peter being Peter Thiel?
Peter Thiel, that's right. Yeah.
Remember, OpenAI was supposed to buy Windsurf for $3 billion. That deal fell through. Google bought all the talent from Windsurf, which is like another AI coding platform. And then Cognition ended up acquiring what was left of the company. And now they raised $400 million. So this is not a public company. And even if you kind of don't care too much about this startup, what it tells us is these are the guys that are going to be buying more from AWS and Google and Microsoft. Like, these companies need to be raising money, get the valuation that can support the multiple on the revenue growth that they're having, which is upwards of triple digits, and then be able to continue to, prove that AI has an ROI. So it's very important to see some of these companies actually build the next Google of tomorrow. And the only way to do that is if they're getting an ROI. And it seems like that's why they're raising this money.
Giving an update on the business and how things were going, and talking about the Windsurf opportunity that we had in front of us. And they were, first of all, they were extremely supportive of doing the deal, and they saw the same synergy as well. But they were very clear with us that they were very happy to give us the support that we needed to make sure that we could get the deal done as well. And so that was a lot of what gave us the confidence to go ahead and go through with the acquisition.
How much is the money necessary right now, Scott, to fend off competition? Look, I'm thinking of you as the first AI software engineer. That's what Devin is. But we hear Sam Altman talking up GPT-5, how good it is at coding. How much are you seeing other companies trying to get in this space?
Yeah, absolutely. So far, we've been quite efficient as a business in terms of capital spend. But of course, we see a lot of ways that we can accelerate our business further with a lot more capital. There's a lot of work to do on go-to-market and on just generally growing the business out there. But of course, much more to do as well on research, model training, and so on.
And many would say the talent wars, as many have deemed them, is an expensive habit for many, Scott. I want to go into your talent because it's fascinating, the way in which you're offering incredibly generous buyouts to certain Windsurf employees, largely because the team is too large, or do you see it more as a cultural alignment because it's about the grind you've tried to make very clear to them?
Yeah, it's more about the cultural alignment. And, I think it's worth calling out that, especially in AI with things moving as fast as they are, we have a very, very intense culture. And that's a lot of what we are. And obviously it's not for everyone. And so
all right. So Cognition raises $400 million. I mean, it is quite incredible to see some of these AI companies and what they're able to do. Also, you know, I think last year I was reporting more on a bunch of random AI companies. Like, dude, I think Colin Kaepernick, the NFL player, started some AI company. Like, it just felt a lot more bubbly of just like just random names getting a couple $1 million to build something in AI. Now, when we're reporting on the AI startups, it feels a lot more legitimate, like a Cognition, like an Anthropic, like the most important companies that are actually showing massive levels of growth are getting the premium valuation, because I mean, like, the alternative is investors would just rather buy NVIDIA or rather buy more OpenAI, right? So from that perspective, I do think maybe there's a little bit more consolidation, and not every AI startup, just because they say AI, is getting money. Meek Mill, the rapper, did tweet about wanting to build an AI company, and Andreessen Horowitz, one of the biggest venture capital firms in the world, they responded to him, said, hey, let us know what you're trying to do. I'm not gonna lie, that felt toppy. That felt toppy. Meek Mill was like, hey, does anyone know how we can talk to a VC? I have an AI idea. And I was like, oh boy, we got rappers getting into the AI game. But the point is, I think the companies that are actually, you know, building are the ones that are getting the momentum. By the way, guys, for everyone asking me about the Figure IPO, it is not the robot company. It is not the robot company. It is like some financial services company that allows you to lend via Bitcoin, or like collateralize your loans via Bitcoin. So I'm not buying any of the IPOs. There's 5 of the IPOs that are in flight. Figure is one of them. Again, it's not the robot company, but there's a bunch of them, including Klarna, that are over the next 2 weeks. Klarna's on Wednesday, that are going public. So that's what we have there. It's like, the Figure company is Figure AI. That's the actual like robotics company, which, look, they just raised at $40 billion. I don't think the raise has been completed yet, but hopefully they'll announce soon that the raise is completed. They don't need to go public. You know, they just raised like $1.5 billion. So I think for them, Brett is more focused on growth versus anything else. And I think they eventually will go public, and it'll probably be a multi-$100 billion IPO, but that'll be in the future. I found out why Google tanked towards the end of the day. So here's the headline. Pubmatic, which is an advertising tech company, Stripe IPO, we don't have an update on when that's going to happen, sued Google. Pubmatic filed an antitrust suit against Google, alleging it illegally monopolized the ad tech market and stunted Pubmatic's growth. The company says Google practices raised ad costs, reduced transparency, and limited competition, harming publishers. Pubmatic expects damages could reach into the billions, echoing similar claims made by OpenX last month. The case follows a federal judge's ruling that Google held an illegal monopoly in ad exchanges and ad servers, with the DOJ now pushing for a breakup of Google's ad business. I guess that's why Google went from 238 to 234 today. Another lawsuit they have to deal with, which, you know, shouldn't be that big of a deal, because now that they got through with the biggest lawsuit of their, you know, of their company's history, like, they should be able to deal with all these tiny ones. But it looks like you're going to have a lot more of these companies say, look, Google, you might not be broken up, but you definitely have been stretching the limits of your monopolistic practices, which, look, let's be honest, Google's a monopoly. Like, let's live. When it comes to search, we know they're a monopoly. Like, we know they are. So it is what it is. The question is, do they really deserve getting hit as badly as they're getting hit to the tune of billions? Dude, how did my camera die? This thing was charged all night. Like, how is this? How is this? It was literally 100% before we started. This is ridiculous, but at least the audio is in a decent spot. But Pubmatic, that is why Google took a little bit of a hit today, 234, and that's why it's red. Let's finish up with Dan Niles, and then we'll keep going from there.
Their AI team at least 4 times in the last 6 months. You know, you look at what's going on with Apple, right? They announced all these AI features for Siri in 2024, but it'll be probably 2026, and they're going to have to work with OpenAI or probably Google following this antitrust ruling to get those features out. So you are already seeing this, and over the weekend it came out that OpenAI has sort of pushed up their revenue forecast for 2030 by about $26 billion to $200 billion. But to get that revenue increase of $26 billion, they're going to have to burn $85 billion more in cash. So the data points are definitely there, but you know, we're in this business to make money. So you have to go, all right, well, do the fundamentals matter right now? Or is it the fact you're going to get even more easy money? The 10-year yield's going down to 4%. And so this market, much like in 2021, will keep going up right up until it doesn't. And so I think you have to look at that. And NVIDIA missing on data center revenues. And you can say, yes, but the growth was so high and all this, but they missed. So that should give you another data point, and you throw on top of that Dell or Marvell, or the fact that Avago's got more ASIC revenues because companies want to cut their costs. Those all speak to the same narrative. So don't confuse the actual data with what the stock prices are doing.
Dan, I think, people who are believers, who are basically pot committed to this whole CapEx story will say, well, sure, companies are not yet seeing the benefits, or they're not yet accelerating their adoption of various AI tools because we're not there yet. And we have to build as fast as we can to get there. The market's permitted a lot of these companies, the entire infrastructure trade, to go pretty far at this point. Is there any sign that the market's going to kind of tighten the reins on that?
Well, number one, I would disagree with your premise that, it's okay to not see returns. We're 3 years into this, Mike, right?
I didn't say it's okay. I'm suggesting the market's been okay with it.
Well, but again, that kind of goes back to the fact that we're looking at rate cuts coming, right? That's been the number one driver of this market really since COVID, and you can argue since Lehman failed, right? So, you have inflation going from 1.4% to 2%. 1.4 to 7% in 2021. The S&P is up 27% because the Fed keeps telling us it's transitory, when I think a lot of people, including myself, thought it wasn't. Then 2022, you admit to it, rate hikes happen, the market gets beat up pretty good. 2023, the Fed goes ahead and goes on hold this year, and the market's obviously surges over 20% this year. Looks like rate cuts are coming. Market starts going up. And so that's doing a lot of this driving of it. And that's why it makes it seem like people are okay with this, because don't forget, NVIDIA is down since they reported. Obviously, it surged a lot off the bottom, but don't forget, like middle of last year, when Microsoft, Google, Amazon all had CapEx spending going up while the revenue estimates were actually getting cut, NVIDIA went flat, went sideways for the last half of last year.
I don't fully understand the argument. I don't fully understand the argument. And the reason for that is because it looks like he's making an argument from 2024 when we're not in 2024. I mean, did he see Microsoft's Azure growth? The fact that Microsoft disclosed their Azure revenue for the first time ever in history is them telling the market, hey, it's growing, and it's growing at a pretty exponential level. Did he see Meta's ad revenue growth? Did he see Google Cloud's growth? Did he see Anthropic's growth? I mean, when he's saying, where's the ROI? I think this is it's one of the laziest arguments from some of the CapEx bears. Where's the ROI? It's dude, the ROI is here. A lot of these companies have reflected the multiple expansion, not because they're spending CapEx. Investors are not stupid. They're not just letting Meta spend all this money for the hell of it, but they're seeing Meta beat earnings by 38%. Which is what they beat by last quarter. They beat revenue by 17%. And they're saying, oh, there's the ROI. It's in advertising. And now Meta has obviously a lot of other verticals they're working on in terms of glasses and all this other stuff. But the point is, the core ROI for cloud and AI that a lot of these companies have been wanting to see, they're seeing it. I told you guys that anecdotal story of my cousin whose company, the tech company she works for, they bought an Anthropic subscription. She only has 500 queries she can use every month as a software engineer because the outputs are so good. So she has to really be careful with how she prompt engineers the inputs into the model. And it's very expensive outputs, but her company is willing to pay for it because it makes her more efficient. We are seeing a lot of different verticals on AI having an ROI. And literally this morning, Zuck's saying 600 billion is conservative in terms of CapEx spend by 2028. And again, Zuck can't just say that to say that. I mean, he's a public CEO. Every investor on the planet that owns Meta stock is hearing him say that. So you can't just throw out a number for the hell of it. And so, Zuck is not the type to throw out a number because we've seen how much he can spend. It doesn't feel like this is slowing down, and it doesn't feel like the ROI is going to be abysmal, given we've already seen the ROI, and I think the ROI is only in the beginning stages of what AI is going to do. I mean, the biggest ROI for all of us, again, is AI assistants. None of us fully have real AI assistants yet. And I think based on whatever Apple's going to announce tomorrow, I don't think it's going to be anything meaningful with Siri, but hopefully soon, 2 billion people will have a legitimate assistant that can make themselves more efficient, productive, that they're willing to pay for. And maybe Apple gives us a little bit of juice on what that's going to look like tomorrow with the iPhone 17. But that in and of itself is a whole nother vertical, along with robotics and FSD, that he's just conveniently ignoring as not existing as an ROI, which I don't think makes a lot of sense. Here's Bloomberg on what to expect tomorrow for Apple on their event.
excited about?
Yeah, I'm excited about the new iPhone 17 Pro line. Personally, I think that the new design on the back looks pretty cool. I think the camera upgrades are pretty substantial, probably the most substantial in the history of the product. And for Apple, that is what is going to drive sales, is those new Pro models. They're going to heavily market and feature this new iPhone 17 Air, so to speak, which is this much slimmed down phone. It's about a third thinner than the iPhones of today. But I still think for Apple's revenue purposes, it's the Pro phones that are going to be the big driver here.
Now, again, as much as I'm excited for like a Siri that can change all of our lives, I am not excited about an ultra thin iPhone 17 Air or a foldable phone. But we'll see what Apple actually shows up with tomorrow on the event.
Mark, I really appreciated how you set the scene for Air in your Power On. You compared it to the launch of Mac Air, right? My first MacBook was like 2010 MacBook Pro, at the time a big old chunky thing. At first, that was a difficult thing for Apple. And with time and innovation, things improved. Explain the pathway you see for the Air going forward.
Well, it's the same as the MacBook Air pathway, right? It came out in 2008. It had some things that worked well. The screen was full size. The keyboard was full size. It was a nice product with a multi-touch trackpad, the first in the industry. But it was too expensive. It was too slow, and the battery life wasn't great. The iPhone Air is going to be very similar. It's going to have a breakthrough design with its thinness. It's going to have great flagship features like a 6.6-inch screen with 120 hertz refresh rate. But it's going to have limitations on its camera and its battery. Over time, you'll see the MacBook Air transition play out as the iPhone Air transition. So you'll see ultimately the Pro phones get thinner, get lighter, get more processor heavy, and get better cameras. And so this is a peak of the future. It's just your beta testing what's really to come here with something that ultimately will be a little bit subpar compared to Apple's other models.
Yeah, and again, I don't think anyone's going to care about the phone, but that's okay because this event is not really for the phone. This event is just to give you a little bit of a preview of what device hopefully will be running an entire new AI experience in 2026. But the phone itself, I don't know if people are going to care that much about. Now, speaking of hedging, as we were talking about earlier in the show in terms of what Evercore ISI said, or Julian Emanuel said from Evercore around how investors should be thinking of hedging. Here's a chart that's giving us a little bit more of an insight into the overall hedging. So of like ETFs, at least. Hedging ETFs, the same one that we saw one of those congressmen buy today, attracted $6 billion in net inflows over the past 7 days, the most since mid-April. This follows about $5.7 billion in the week prior and is well above the average seen in Q4 of 2024. So these are your like bearish ETFs, your NVIDIA 3X bear, your IWM bearish ETFs, your S&P bear ETFs, your regional bank bear ETFs, all those ETFs that are more like your short QQQ. It seems like they're attracting more net inflows, which I don't think is that bad because, yes, I agree with Cameron. It's for FOMC as we've got that coming up. But also, the other thing that's important about this is that, like, look, we're in a seasonally weak time and investors might want to hedge. Quite frankly, retail investors spending, less than 1% of their portfolio on some hedges. It's not the worst thing in the world if we were to get a bit of a dip, and that would then allow them to have some cash to then buy the dip. Now, leveraged long ETFs, things like your NVDL, 2x leveraged NVIDIA, have posted $5.9 billion in net outflows over the last 2 weeks, the most since 2024. So you have more outflows on the net leveraged long ETFs. You have more inflows into the net leveraged hedging ETFs or short ETFs. And I think that's reasonable going into FOMC and going into September. I don't think that's some type of anomaly, but that is one piece of data to look at. Robinhood, by the way, 117.40 after hours, as we think of certain market participants that are hedging a bit more going into September. So that is what you got from a macro perspective. Apple needs to fire Tim Cook already. I don't know if, I kind of feel like it's a Google fire Sundar situation. I don't know if firing Tim Cook is the answer. I think Apple has just been taking their sweet time to develop the AI-oriented version of what they're going to be giving to the marketplace. Just like Google took some time to really figure it out. By the way, VO3, saw some stats on it this morning. I mean, it is crazy. The amount of volume that VO3 is getting in terms of video production is kind of wild. I'll see if I can pull that up. So I think if Apple goes to 300, no one's going to say we have to fire Tim Cook, but he's taking his time And the question is how long investors have to wait to see this playing out. Oh, by the way, speaking of ETFs, let me pull this up and then I'll also pull up the Google VO3 stats. Take a look at this, bro. ETF. So I just talked about hedging ETFs, right? Overall ETFs have cracked 800 billion in year-to-date inflows, which is 5 billion a day. I mean, that is on pace to hit 1.2 trillion by the end of this year, which would be a brand new record. As you can see, these are the top ETFs. Let me know if anyone owns these ETFs. VOO, SGov, VTI, SPLG. IBIT is number 5. It's a Bitcoin ETF. That is crazy. IVV, QQQM, GLD, that's gold, BND, JEPIQ, covered call ETF. I mean, you have a bunch of these names. The ETHA, Ethereum one from BlackRock, that's up there in the top 15. I mean, it's quite incredible. So even with the hedging, even with some of the volatility, you are seeing massive levels of capital come into these ETFs as investors would rather be positioned in net long more so than be in cash. And based on money market funds over the next coming weeks, when we cut rates, we're going to see how that continues to play out. By the way, money market funds for last week, I don't know if we covered this. Did we cover this? Was I live on Thursday? I don't even remember. I don't think I did, but 52 billion increase, 7.26 trillion, 52 billion increase in money market funds last week, even with the expectations of rates coming down. So still, there's plenty of money on the sidelines that creates the upside for going higher. And again, although, yes, there's been a ton of top signals that I will also acknowledge are very frothy, the net feeling from at least what I see on Twitter is people do not believe in this rally. Tom Lee is right. It is the most hated V-shape ever. And people are bearish, dude. Like, I see more tweets I genuinely see more tweets trying to call the top every single day based on whatever piece of news they find to say, oh, this is toppy, more than I see people say, hey, this is the time to go long. And I think I follow, a pretty decent amount of bears and bulls on X. But I see way more people saying this is the top. And you kind of need that. You need that skepticism to go higher. So we're going to have to see towards the end of the year, but it doesn't feel like massive, massive euphoria. I know some like Open Door could feel like euphoria. This like SPAC, not SPAC, but whatever Octo thing that was launched, say that feels like euphoria. And they are forms of euphoria, but let's say they all go to zero. Okay. Open Door goes to zero. That's a $5 billion hit to a $30 trillion equity market. Octa goes to zero. Okay. That's another $5-7 billion hit to a $30 trillion equity market. Like those, that's why I keep going to this argument that euphoria needs to be seen in NVIDIA and Amazon and Microsoft and Google. Google was at 150 for the majority of the year. It just broke out. Like that's where real euphoria gets scary. But someone buying some random stock with some of their profits that they made on a really good company and like having that go up 10x in a day and then it goes to zero, maybe they take some profits, maybe they lose their money. That to me is not euphoria. That is a type of euphoria in a certain section of the market. That is not market thesis breaking euphoria until we see it in the big names. And I don't fully think we're seeing it in the big names. Andy says lower guidance would worry me, but that's not happening. Yeah, and look, we'll see Q3. Maybe we do get lower guidance, but we have to find out in Q3. In Q2, we didn't see that. In Q1, we didn't see that. Maybe in Q3 we do. But if we don't see it in Q3, what is going to be the excuse? What are people going to say? Like, what is going to be that fundamental argument that is bad? What about Palantir? I know Palantir has an aggressive multiple, but I think, at least this is my opinion, you can agree with me or not, Palantir is a unicorn. And I think it's substantiated by the fact that Palantir has had an aggressive premium for almost a year and a half at this point. Like when it was at 70, it was pretty damn expensive. At 156, it is also expensive. So I don't count Palantir as like massive euphoria because I think retail just is not selling this name because they bought in early. The growth now is the fastest growing name in software. And when you look at OpenAI worth $500 billion and Anthropic worth $200 billion, Palantir at 350, do the public metrics maybe justify that quantitatively? No. But are people selling it because of that? No. And eventually it can grow into its valuation. So I think that's more of a unicorn. That's hard to say, oh, this is massive euphoria. But if NVIDIA was $300 right now, yeah, that would be euphoria. Like if NVIDIA was a $7 trillion, but like that's not happening. NVIDIA's down from earnings and they raised guidance and they're down from earnings 10%. I just don't think that screams euphoria. Yes, Tesla is also a unicorn. The difference between Tesla and Palantir is Tesla has held its multiple for the better part of the past couple of years now. Based on the expectation and potential of what they can achieve. Unfortunately, they haven't achieved that potential yet because the earnings growth hasn't been there for 2 years. Palantir is just in the inflection of their earnings growth. And if that earnings growth goes away, it's not going to be good. But it doesn't look like they're slowing down. Tesla has dramatically slowed down since 2021 because, rate cuts, EV market, all that stuff. And I think they'll eventually get back to growing in 2027. But that doesn't mean people are going to let Tesla fall back to 100 until then because they just believe too much in its potential. So Tesla, Palantir, to me, those are unicorns. Those aren't reasons to be like, oh, it's a crazy, frothy market, when those companies actually have reasons for why, people choose to invest in them. Yes, Open is a unicorn because it is the only iBuying company in the entire market. That is correct. That is. Did Eric Johnson have a response to Skrelly today? I am curious if they go back and forth and this turns into a classic bull bear with these two guys. I don't fully see a response. I see a day 20 video at Drake's house. I don't see a response to Skrelly. I don't even know if Skelly fully is short yet. But it looks like they're going to be going back and forth. Open Door, that stock is 609, down about 8% on the day. Also, dude, look, why are people so upset at Elon's compensation? I thought everyone would be okay with Elon's compensation. Everyone's like upset at it. They're like, he doesn't deserve $1 trillion for getting this thing to 8.5 trillion. And I'm like, I don't know, dude. That would be the most valuable company in the world. I feel like, and given it's so hard to do, I feel like it would be valuable. This guy right here, he's in Silicon Valley tech space. He bought $100,000 of Tesla today. And he said, Elon has to make Tesla 8x more valuable to get to a giant $1 trillion payday. I'll happily bet on him doing everything he possibly can to do that. And he can. And so he bought 100,000 of Tesla. I mean, like, I saw another person match this guy, bought another 100,000 of Tesla on Twitter. Like, I don't know if he put 100,000 in Tesla just based on this Elon compensation, but the idea that you are with Elon on the journey for, I mean, like that 100,000 becomes $1 million if Elon can 10x this thing. Elon gets $1 trillion. All right, Elon can have $1 trillion, and that 100,000 becomes $1 million. You're still pretty happy. If he hits those S curves around robotics and FSD, which is not easy to do, right? It's not a foregone conclusion that, I mean, like, we're not even talking about the competition with FSD and Waymo robotics. There's a bunch of, Unitree is a company that's filing to go public. That's another robotics company from China. They're going public at a $7 billion valuation. Like, that's going to be competitive with Optimus. There's just a bunch of different things going on that could stop Tesla from being successful. So it does feel like this is going to be tough to do. And if he does it, then maybe it's not the worst thing in the world. $140 million this company does in revenue, IPOing at $7 billion. So again, the larger takeaway is, I think being long makes sense. I think buying the dip makes sense. And I think a lot of the top callers are just trying to find an issue with this market where, yeah, I'm not saying there's no issues, but to say the whole CapEx thing is like the biggest issue, I don't know. It doesn't fully make the most sense to me. Let's see a couple of other updates that we have going on right here. There's a bunch of other macro things that I wanted to talk about today, especially some more headlines. Geopolitically, SoundHound, how did that do today? SoundHound was up 6%. I don't know why that was up 6%, but you do have some green. And that one also had a great earnings. Amit, you're big on BM&R, but what about Sol digital asset treasuries? I know a little bit about Solana, not enough to really talk about it in a sophisticated way. I have a bunch of friends who are deep into Solana. I know Solana is the biggest platform for meme coins. The Trump meme coin is on Solana, all that stuff. I know like there's a lot of beef between Solana bulls and Ethereum bulls because people think Solana is just faster. It's like more decentralized. It makes more sense. I don't know. I don't have any massive thoughts, but the idea that we won't have a ton of Solana treasuries, like, no, I think those are coming too. I think it's going to be a war for crypto treasuries, and the best treasuries that can raise the most capital are going to win. And then obviously the best assets that or the best underlying assets that have the most powerful networks, whether it's Solana, Ethereum, et cetera, maybe WorldCoin, are going to be the reasons why those treasuries get a premium to their NAV. But it comes down to how much you believe. And it seems like Ethereum just on stable coins and tokenization is getting a lot more of that momentum. Nuclear startup Deep Fission goes public in a curious SPAC. SPACs are back, bro. SPACs are back. Oh, doesn't Tesla have a Vegas event tonight? Isn't that happening too? Or tomorrow? Tesla expected to reveal next generation mega pack at Las Vegas event in Las Vegas, September 8th. Oh, that's today. Dude, did you guys know about this? I think I found out about this last night, that there's a Vegas event. The event, dubbed Las Vegas, will take place in the Boring Company tunnels in Las Vegas. I actually went through one of those a couple years ago. And it looks like Tesla's going to be announcing more stuff, more updates to their battery part of the business. There's the invite right there, Las Vegas for Megapacks. 8 p.m. Oh, 5 p.m. Eastern. Well, it's 5 p.m. right now. Are they live streaming this? Are we going to get to see this keynote? Or is this going to be... I mean, it should be happening literally right now. Interesting. I don't see it on their channel, but it looks like that is happening. Nebius is running. Do we have Nebius news? What happened, Nebius? Oh, 9%. What is going on? Let's see. Why is she running, Nebius? There's got to be news. I don't have it. No one has it. None of you guys have it either. I don't think anyone has it. No one has it yet. Oh, this is exciting. This is exciting. What happened? Did they announce a Bitcoin treasury or an Ethereum treasury or something? What? 5 p.m. PST? Okay, so that's going to be a little bit later in the day then. No one has the news. I don't see it from any of my sources. I don't see it. Let me check something else. Hold on. I think I see it. Hold on. Let me confirm. Is this real? Is this happening? Let's see. How do you spell this thing? Nebius? Nebius? Is this legit? Oh, Nebius announces multi-billion-dollar agreement with Microsoft for AI infrastructure. Whoa. There you go. 11% up on the day. Let me see if I can get the actual press release. Oh my. Microsoft Nebius partnership, AI infrastructure. Does not look like it's slowing down. Yeah, here it is right here. All right, we got it. Nebius has agreed an announcement with delivering AI infrastructure to Microsoft. Under this multi-year agreement, Nebius will deliver dedicated capacity to Microsoft from its new data center in Vineland, New Jersey. I've never heard of Vineland, New Jersey, and I've lived here for 25 years, but okay, there you go. CEO said, Nebius' core AI cloud business serving customers from AI startups to enterprises is performing exceptionally well. We have also said that in addition to our core business, we expect to secure significant long-term committed contracts with leading AI labs and big tech companies. I'm happy to announce the first of these contracts, and I believe there are more to come. The economics of the deal are attractive in their own right, but significantly, the deal will also help us to accelerate the growth of our AI cloud business and further in 2026 and beyond. Nebius expects to finance the capital expenditure associated with the contract through a combination of cash flow coming from the deal and the issuance of debt secured against the contract in the near term, aka they're probably going to be issuing a convertible note, but that's okay if the growth is, way more than the convertible note. At terms enhanced by the credit quality of the counterparty, the company is also evaluating a number of additional financing options to enable significantly faster growth than originally planned and will update the market on its financing strategy in due course. Boom, baby. There you go. It is not slowing down. Congrats. Let me know in the chat if you're in Nebius. It's in South Jersey. Of course it is, dude. Only time I go to South Jersey is for Atlantic City. Otherwise, I don't even know South Jersey. Like I really have never explored South Jersey. But if you're in it, congrats. And it was down today. Yeah, it was down 5% at the market close. We looked at it. Wow, 17%. Wait, hold on. Let me make sure that's accurate. Nebius after hours. No, 19%. It is up 19% after hours. It was a 64, and now it's up 19.7%. Wow, that's a big one. Microsoft's got to be pumping off this, right? Microsoft was below 500. That one should be above. Not really above. Got a little bit of a green candle. I mean, this helps Nebius way more than it helps Microsoft. Microsoft's a $3 trillion. Nebius is what? 20 billion. What's Nebius' market cap? It's not super aggressive. 15 billion. Yeah, I mean, like it's easier for that to pump. 78 on Nebius. Congratulations for everyone who's in it. Shout out to Nate. Shout out to Sam. I mean, these data center plays that are growing and that have really good leadership. Nate just texted me. Oh, he's excited. Watch him show up in the chat randomly. Watch him show up in the chat randomly and start spamming Nebius. There you go. Wow, $80. She's moving. The Nebius spike is because of a partnership with Microsoft. Nebius partnership with Microsoft. There you go. I mean, I'm not in Nebius, but I love seeing this because it means that the overall AI infrastructure, data center capex, that stuff is not slowing down. It's just not. And everyone wants to say that it's slowing down to be the person that got to say that AI is a bubble and that it's fake. And it's like, it's just not slowing down. Microsoft's not signing this partnership if they don't need more facilities. And obviously they're signing it for a reason. 82 on Nebius. There you go. 82 on Nebius. Yeah, shout out to everyone buying. I mean, Nate's been buying the dip on this in the low 60s, in the mid 70s. Like, this is an all-time high, right? I think this is all-time high. If you've been buying the dip on this, 28%, bro. What is going on? I mean, it's bullish, but my goodness, market's like, no, this is like really bullish. 32% now on Nebius. Shorts. Wait, what's the short float on this guy? Nebius. Do we have any numbers on how much this is worth? Does anyone have the numbers? Because I didn't see any numbers. I don't know if they would disclose that yet. Short float, I think, is what? 15%? 20%? 10%. Okay, so not a crazy short float, but still, you could have a little bit of a squeeze on the shorts. CoreWeave, is that moving? Kind of. Not really. CoreWeave is up 0.5% after hours. Nebius is up 33%. It's not moving. Oh, wait, I own Nebius. I do own it. 85, by the way, in my stock draft. Holy crap, I forgot about that. It's not going to reflect after hours because it has to update tomorrow, but I do own it. So Matt's at 24. I'm at 11. Steve's at 1. Tanner's at 11.8. Tanner's actually ahead of me now. AppLovin got him ahead. Chris is at 2.6. Nebius, I was up 26%. I'm going to be up. Hold on. Let me do the math. If this thing stays at 80, I should be up 60%. That should be another 30% added to my stock draft. Now, this freaking Duolingo is the reason why it's the reason why I can't breathe in this stupid draft, because of this freaking dumbass green owl that's not useful for anything. But besides that, I do kind of own Nebius. So there you go, dude. Congratulations to those that are $87. My goodness. Wow. Tanner says, who lied to me about AI was a bubble? Oh my goodness, dude. Wait, why 17 billion through 2031? How'd you guys get those numbers? What do you mean 17 billion? Do we have numbers on this? Oh shit. Okay, so Nebius didn't say this, but apparently I think this is Reuters or Bloomberg. 17 billion through 17.4 billion through 2031. Oh, that's why it's moving the way it's moving. Now, that's not confirmed yet from them. The 17.4 billion. Dude, that's a lot of wait, the market cap, guys, is was 15 billion before this 30% move. So they got their entire market cap in a 7-year deal. Yeah, if it is 17 billion, yes, this move is 100% deserved. Nebius secures 19.4 billion. Okay, some people are saying 17.4. Some people are saying 19.4. Let me see if I can find a legit source. 19.4 billion. I got to see if I can find a good source for this. But if it's anywhere near that 20 billion mark, I mean, this is just freaking massive, bro. Like, absolutely incredible if it actually is able to do that. Oh, Bloomberg. Okay, Bloomberg says 17.4. Bloomberg. Okay, so maybe it's 19, but Bloomberg says 17.4. The terminal says 17.4. Okay, whether it's 17 or 19, the point is it's a lot of freaking money. That's literally 2 billion above their market cap as of the close. Dude. Let me put in the chat who owns Nebius. Let's see. I never did a poll on who exactly owns it. So only say yes if you own NBIS. Do you own NBIS? And if you don't, you can say no. But I'm curious how. I'm going to say 30% of you guys own it. I'm going to go 30% own it. Let's see if I'm right. I'm going 30%. So far, I'm right. 60-40. So far, I'm right. 60-40, 61-39. I feel like it's 30% of you guys. 84 on NBIS. Shilpa owns it. Someone says I'm a customer of them. Okay, well, there you go. Stewart has 600 shares. Impact on CoreWeave, I don't fully know. I mean, CoreWeave is a great independent business by itself. I don't think it's bearish CoreWeave. I think this is bullish the entire landscape. Again, CoreWeave just trades at a different multiple. Like, I think that's more of a valuation thing. A lot of the insiders have been selling because the IPO lockup. By the way, didn't the NBIS CEO sell a crap ton of shares the other day? Like 270 million or some shit? I think he did 200. I think he sold like 4 million shares or something. So this, I mean, if he had waited like a day, bro, like, I mean, that would be worth like what? Another couple hundred million? Yeah, sold 3.1 million shares for 200 million. Okay, well, regardless, if you bought the shares that he sold, there you go. NBIS up 30%. It was scheduled. Oh, it was scheduled. Okay, so he couldn't control it. It was scheduled. Okay, that's fine. That actually makes more sense. But the stock did drop over the past couple of days based on that sale. And if you understood the thesis and bought the dip, there you go. This is why insiders selling again. Like, it's really hard sometimes to be like, oh, the insider's selling, therefore the stock's dead. It's like there's a lot of reasons for the sell, but a real, important milestone for the company in terms of landing a deal with a hyperscaler, that's not easy to do. And that's really where the thesis is, and that's what seems to be moving this bad boy. 35.65 on the poll is what you have. Amit, I literally just bought 32 shares for fun now, and I'm already up 16%. Is this the top? No, bro. This is just one of the most exciting growth stories in regards to AI that we have seen, I think, in a very long time. And look, could this thing go down 20% tomorrow? Yes, because it's not easy to hold a 30% gain. But this is if this is accurate, 17 billion. I mean, like, yeah, you jumped in right before the entire market realized how big of a deal this deal was. And it was great timing on your part. So not too bad. Obviously, the stock can go down for whatever reason. But like now, if the stock goes down and the market knows there's 17 billion coming over the next 7 years, you're just going to have a lot more people getting ready to buy that dip, which is not too crazy. Why is this not bullish for NVIDIA? This is bullish for NVIDIA. However, you can't expect this to move NVIDIA because it's a $4 trillion company. And not all of these data center plays have to move NVIDIA, which has already made a massive move this year, up 30%. But it also is a reason why, if NVIDIA has a massive dip, I think you buy that dip. Like, you just don't see all these ancillary players that at the end of the day, all that 17 billion goes into CapEx for what? More GPUs, more AI, more inferencing. Like, all of this stuff comes back down to the semiconductors, the biggest beneficiary being NVIDIA. So even if it doesn't reflect in the stock price today, those deals are massively bullish. Yeah, I think this should double their market cap, right? I mean, 17 billion over what, 7 years? So how much is that? That's okay, so NBIS is doing, how much revenue is NBIS doing right now? NBIS, let's ask Google. How much revenue does NBIS do? Google Financials with Gemini is actually getting really good. 117 million in 2024. They expect to reach 630 million by the end of 2025. Okay, 17 billion. Let's just say it's 15 billion. 15 divided by 7 years is 2. Let's just call it 2 billion a year. That already doubles. No, more than doubles. That quadruples their 2025 ARR. Right? Or 2.5x. What is that? That is basically, 3.1x. That triples, a little bit more than triples, their 2025 ending ARR for the next 7 years. And if they, let's say, not grow triple every year, if they grow like a conservative 25, 30% every year, then these guys are going to be doing, by the end of 2031, roundabout, call it 7-8 billion of revenue. Right now they're doing 635. I mean, that is crazy. And that obviously is a level of growth that we have not seen in some of these data center plays in a while. I think Iran is the closest to being able to put up that type of growth, and that's not even close to a $17 billion deal. APLD with CoreWeave kind of reminds me a little bit of this deal as well. Tanner says this is akin to CoreWeave OpenAI deal. It's a complete game changer. Just from the math alone, 17 billion on 7 years is 2.1 billion a year. They're doing 625 million. They've 3x their revenue, at least for fiscal year 2026. I mean, if they only had Microsoft revenue, which they're going to have, you would imagine, a lot more than that in 2026, they're already tripling their growth rate. If they, let's just say they keep the same growth rate of 2025 and they do another 625 million, they'll be doing about basically 2.8 billion of revenue, which is up from 625 in 2025. That's more than 6x. I mean, this is a massive deal for Nebius. And I don't expect that. $88, there you go. I mean, as I'm saying the numbers and I'm seeing the stock on the screen continue to go up, it makes a lot of sense. It makes a lot of freaking sense. This one deserves a premium. It's not even a premium. This one just deserves to go to a reasonable market cap on a growth rate that is upwards of 500%. The only other company I know that's growing 500% in AI is Anthropic. That's the only, and OpenAI. I don't think OpenAI is 300%, not 500. So the only other one is Anthropic, and they're private. This is incredible, dude. Yeah, it's just a passing fad. Just a passing fad. My goodness, bro. Iran's pumping as well with this, is it? Iran, yeah, she's pumping as well. There you go. These data center plays, maybe that's what we got to really look into in 2026, guys. Maybe that's something we really got to see. Is there one of these that's another gem that's out there? And so many of you guys did well on Iran and Nebius, and they probably continue to do well in 2026, but maybe there's more that are out there that, you know, maybe it's not the most like asymmetric 10x opportunity, but even if it does 30, 40% next year, I mean, like that's a great opportunity in a world in which the markets, if we hold on to the bull market, probably going to be a bit expensive going into 2026. And so for the people that found these Bitcoin miners that turned into data center plays, or these companies that used to be like Russian search engines that are now data center. I mean, this is just incredible. Nebby is trying to touch 90. She's trying to touch 90, 89.44 after hours. Shout out to Nick B Investing. My cost basis is 20. Put your cost basis in the chat for Nebius. Let's see how early some of you guys got in, but shout out to Nick. Cost basis at about $30. Incredible on Nebius. Duck says, I doubled my Nebius position today, 25% of my portfolio. Shout out to Sam, MVC, and my mom and dad. Yeah, MVC, there you go, 90. MVC, who did a deep dive, I think, on someone's channel with Sam. Sam did a deep dive on my channel. They're like the biggest names, along with Nate, that I know in FinTwit, that have been calling this company. There's his Twitter right there. I'll link it in the chat for those that want to follow him. And they've been doing pretty damn well on this call. I mean, sometimes you have a good call and it becomes a great call. And it looks like Nebius is becoming a great call. It looks like it's becoming a great call. I see Swanky has 68.85. Dorothy has 26. Prakash has 44. Random Reels has 29. CBJ 65. Tyler 24.60. Philip at 47. Mark has 2,000 shares. Wealth Building 22, Magusto 55, Nick's Hobbies Channel 46, Byron 76, Vishal 67. A lot of these are in the, I would say, 40 to 50 range if I had to average it. A bunch of you guys below 40, a few of you guys below 30, but a decent amount of you guys 40 and 50. So it's up around about 70 to 80% for most people. Tanner, are you in this one? Is Tanner in this? You are in this, right, Tanner? If I'm not wrong. Or are you in CoreWeave? I don't know if Tanner's in this. 91.70. Jose, I think, is definitely in this. 92. There you go. Just continuing to make a move. Continuing to make a move. Couch Investor, yes, I forgot about him. Couch Investor's also in it. Not bad, dude. Oh, there's Jose. Jose, I'm gonna call you right now because we said if you're free, feel free to not pick up if you're not. But Jose and I were talking last week and we're like, it's just easier to call him on the phone versus like set up a StreamYard. So Jose, let me see if I can give you a call. If you're free, you can give some of these thoughts on Nebius. But shout out to Jose. Jose has made you guys a lot of money this year, bro. First of all, he's made me a lot of money by coming on the show, and then Robinhood magically goes up every time he's on. But in terms of the semiconductor ecosystem, he has made a decent amount of people a decent amount of money. Wow, dude. 95? Oh, my goodness. She's going to 100. She's going to 100, right? Like, that's what's happening. She's going to 100. All right, let's call Jose. Let's see if he can pick up. Goodness, bro.
Yo.
What's up, man? How are you?
Pretty good. Yo, I'm back home, so if you want, I can log in really quick.
Okay, I'll give you a StreamYard. Cool.
All right.
All right, bet. All right, we'll get Jose on. Dude, 97. This is, oh my goodness. This is the beauty of being an investor in this era, because this is not hype. This, what we're seeing right here, 17 billion over 7 years, quadrupling revenue year over year, 98. This is not hype. This is being an investor in one of the greatest times in human history, the most insane technological revolution we have ever seen the craziest technological revolution we have ever seen. 100, baby. There it is. This is the type of ecosystem that we are all investing in. Guys, I got to ring the bell. Congratulations, 100 on Nebius. And she's not stopping at 100. She's not stopping at 100. Yes, it's even if you're not in it, it is so exciting to see, because at the end of the day, the theme of this market, I don't care what stock you're in, the theme of this market is AI. And we need AI growth. We need CapEx growth. We need data center. We need all of that. 102. Oh my goodness. We need all of that to keep going up and to the right, to continue seeing the growth and the eventual ROI. And deals like this are it's just more validation. More validation. Yeah, imagine you have short-term call. I mean, dude, 103. It is not stopping. It's just going up. It keeps going up. If you had calls, especially short-term calls, I mean, tomorrow's going to make you a very happy person. 104. 104. Hold on. There's a meme that describes. Let me see if I have it saved. There's a meme that literally describes what's going on right now with Nebius. It's the Matthew McConaughey meme. You guys, it's about the green candle. Let me see if I can find it. It just keeps going up. It's just incredible. Yeah, if you have covered calls, maybe not the best, but if you bought calls, you are doing all right. Brody, congrats.
Congrats. Not too much. I mean, I only own a small position, but it just shows a great indication for the overall market. I own both CoreWeave and Nebius, and I think stuff like this just tell us this AI market is real, man. It is completely real. One thing that we've been talking in the channel is it's these data center players that are going to be rallying right now. And that's why I kind of we take the low, right? Semiconductor cloud service providers. Where's the next bottleneck? And I think plans like this, Nebius, is a 7-year deal for Microsoft alone. Microsoft is not the only one with AI labs, right? It's not the other one. You're going to start to see, I think by the end of this year, more deals like this with Nebius. I'm more into CoreWeave, but CoreWeave with Iron probably, which it just shows that compute constraint is definitely pretty heavy right now here for the AI space.
Dude, 17 billion over 7 years. Like,
yeah.
How can you make sense of why Microsoft is willing to spend that much on Nebius?
Just the demand they see for AI is crazy. They're either, I think it's most likely going to be inference. I think Microsoft, what they're hedging on right now is that more of the consumers, more businesses are going to start to use those AI agents, whatever AI chatbot is happening. So they're going to need to not only invest heavily on their own AI infrastructure, but rent out capacity for their own AI infrastructure. And Nebius is nice. I own CoreWeave more. CoreWeave is probably a bigger position in my overall portfolio, but I'm super excited for both. And it's all about active power. Which companies can deliver the more power? Because right now, power is hard to get. You can't just put utilities and all this AI power infrastructure. So whoever holds the most active power by the end of the year is going to be great. And Microsoft, I mean, 20 billion, that is wild. And it's not the only player out right now.
Yeah, dude, this is quite incredible. Now, is this bearish CoreWeave? Is there any trade-off here, or how are you thinking of it?
No, I don't think it's bearish CoreWeave. What I want to say, if you are a Nebius shareholder, I think one of the big things for Nebius is you do have kind of the AI infrastructure and the AI studio. The AI studios is kind of more like software stack on top of it. They tend to have higher margins than that. I believe this deal, typically compared to what Nebius has, is a lower margin. Somebody like Microsoft, they don't need anything on top. They just want the pure bare metal infrastructure. And by that, they just want the GPUs. They don't need you to add on any type of software or anything solution, because Microsoft is good at that. So that 20 billion is great. I don't think it's any indication that they're going to leave CoreWeave. CoreWeave is building up massive amount of infrastructure as well. So right now, it just shows you that if you are an AI lab, you need to go out there and spend lots of money. You need to reserve that power. You need to reserve that infrastructure, because you don't want to be left behind. So the question is this Microsoft doing it for OpenAI, or is this Microsoft doing it for their own AI initiatives as well? If it is, it just shows even another AI aspect here in the AI story.
Yeah, it seems to be an entire 107. It seems to be an entire. I'm buying a Lambo tomorrow. It seems to be an entire ecosystem play that's not really slowing down. So your takeaway, by the way, guys, Jose's Twitter, I'm putting in his YouTube right there in the chat. You can follow him there. Your takeaway seems to be that it's just AI is real. It's very real.
Yeah, 100%. And AI infrastructure continues to be the bottleneck here. I was kind of, one thing that I'm working on is kind of creating the active power, and the active power is how much power infrastructure these AI companies can have. For example, CoreWeave mentions that by the end of this year, they expect to have 220 megawatts of connected power. And by the end of next year, they're expected to have almost 1 gigawatt. So that alone, if they kind of convert that truly, that's just in that alone, it could be a 5x revenue booster. And then you have companies like CoreWeave as well. CoreWeave has a little bit more. They have about 470 active right now. They're expected to go to 900 megawatts by the end of this year, and closer to 2 by the end of next year. So right now, all these companies are making these deals. I'm pretty excited for the overall AI space. I think we're going to see these types of deals announced at least in the second half, because if you have been following this, you know that in the second half, a lot of these players are going to be building a lot of AI infrastructure. Nebius mentioned by quarter 4, they're going to see a lot of their AI build-outs really start to turn on. CoreWeave mentioned that by the end of quarter 4, that's when they're going to be spending nearly about $10 billion in capital expenditure in just one quarter alone. So for some reason, quarter 4 is starting to become a really big time for a lot of this AI infrastructure to be built out.
Yeah. It also feels exciting, because if Microsoft's willing to spend this much on a very small company, it seems like, as you said, they need compute from every. I mean, it's a similar Google invest in a Bitcoin miner, TeraWulf, right? Like there's an insatiable demand for AI data centers, and it looks like that's not going away anytime soon.
No, and as AI,
he said, I wouldn't have bought Nebius had it not been for Sam's thesis. Thank you, Amit, and your guest, Sam. I think a lot of you guys also have bought it because of Jose. Speaking of Sam, if you can turn on his camera in the background, which I don't know if it'll be Sam. I'm going to put you on stage. Let's see. He just texted me. Let's see if he can come on. Sam, what's up? You there? Okay, let's give him a minute. He's probably. I wanted to just bring him up as soon as we got from that, but he'll be up. He'll be here to talk about it. Yeah, go ahead, Jose.
But yeah, I mean, Google also announced kind of TeraWulf, CoreWeave, Both are partner there. And we saw Iron just announced a massive kind of GPU buy as well. So this market is exciting. I think we're going to see a lot of these stocks follow through. But I want to say there's only a selected that are right now kind of doing really well in this space. So just be careful. Some might pump with news like this. That might just be like a quick pump run. Understand the companies you're buying. But at the moment, capacity is definitely a big issue. And we're still just in the chatbot phase of AI, right? I mean, that's the crazy thing. What happens when kind of the robotics is needed, the inference needed just for that market alone is crazy. And I was just talking I think in a live stream or another video, I was just in a barbecue 2 weeks ago, and my friends who barely talk about AI, they're like, you know what, Jose, which one should I subscribe to? I'm looking to subscribe into one, pay that $20 a month. And these are people that usually don't kind of follow the biggest AI story, the biggest tech stories right off the bat. So it kind of shows that the consumer market is moving a little bit more to the AI space right now.
Do you feel toppy when some of your friends at a barbecue say, "What do I invest in?" Or are you happy that?
No, so they're not talking about investing. They're talking more about subscribing to the service, because they're like, look, I used AI in my job and it's actually pretty cool, and I started to use it more at my consumer at my job, at my typical real life. So I find that nowhere near the top, as we're seeing more customers coming into the AI ecosystem. So I like that a lot.
Gotcha. Yeah, it's just more and more people seeing the use case from just the chatbot itself. I ran up 7% after hours, and that's not even really the core workflow, from an agentic perspective over the next 10 years that we're going to see. The chatbot's going to be largely irrelevant in terms of how this is all going to play out.
Yeah, I mean, that's the thing. It's like, if I don't know if all these AI tech leaders, and I think since early this summer, when we saw all these big players increase their capital expenditure, it's just this earnings season, but it feels like forever ago. All these companies came out and saying CapEx is going to grow dramatically. I don't know if they've seen some secret AI files that they're getting extremely, extremely bullish, but the overall market just wants more AI compute at the moment. And that's why I can't see the bearish thesis on a lot of, like you mentioned, the semiconductor stocks have kind of seen a bit of a dip lately. Like, what's the sentiment behind there?
Yeah, it's I think people are trying to call the top on NVIDIA because it's down from 185 to 170. And it's like, are you fucking stupid, bro? Like, genuinely, are you an idiot? Like, really? That's the top. It's down $17. That's the top. It's like, okay. I mean, like, if that's the hill you want to die on it, but it just feels like a silly reason for people to get this hung up on this. Let me show this post by Duck, who just tagged me in it real quick. This is someone who has made good money on NBIS. There you go. Duck says, first time making a post like this. I have to shout out the names listed above: Sam, Jose, MC Investing. I would have never bought this before. I doubled my position literally this morning. I don't have any words for this. Thank you for the creators above for your work. Again, just incredible.
What's the other one under that? Oh, yeah. Okay. Nice.
Yeah. Oh, I think this is probably Canada, right? TFSA is Canada. So there you go. I mean, just incredible returns inside of these accounts. All right. I think he's ready now. Sam, what's up? We can't hear you because you're muted. Dude, this is why I don't use OBS. I know it's smoother, but it always has issues, bro.
Okay. How's now?
You are perfect.
I don't use OBS, but it defaults to it for some reason. I got a Scarlet.
Okay.
So, I mean, just another day, guys. Like, no, nothing's happening. Just a boring day. And holy cow, NBIS is up over 50%. Wow. I mean, dude, I didn't see this coming this quickly. Jose, appreciate watching your channel. I've been watching your channel for the last couple of years.
Have you guys ever talked, you and Jose?
No,
ever?
first time. Maybe in Spaces, I think, Sam, right? I think maybe in Sam we might be in Spaces, but like this, no. So nice to meet you, man.
Nice to meet you, man. I mean, it's crazy, just like with the. Anyways, about NBIS. I'm actually really glad that you're in it too, Jose, because to be honest, you're just like seriously a professional and expert when it comes to the semiconductor space. And the fact that you caught wind of this beforehand too, I'm like, wow, this like really affirms my theories.
I mean, I wish I would call it a lot more. Like I said, I've been more in CoreWeave, but just the overall ecosystem here in the data center space, in the data center infrastructure, I think is still pretty crazy.
It's insane. And Astera Labs was up. I don't know how many percentages was up, but as at $200 for the first time ever. This thing was trading at $60 just last April, pre-IPO levels, and then Nebius was around $20, and now it's like, you know, I knew this kind of stuff was going to come because you already had Cloudflare as one of their customers for Toloka. You also have Shopify as well. On the infrastructure space for Nebius, which is its core business, I didn't think that we'd sign up a major hyperscaler this quickly. I mean, it just goes to show that if you're not going to CoreWeave, if you're not going to Oracle or any other hyperscalers, you have to turn to Nebius, who's growing their entire data center stack and footprint very quickly. Guys, this is not the top. Like, it's just, so many people are just calling the top for AI. They're saying, hey, demand's going to fall off a cliff and everything. But like, I don't know. Why would Microsoft sign up with Nebius if they really didn't think that there was much demand coming through? So
and that's some part of them spending already crazy amount of money on their own AI infrastructure. So they're already spending on that, and then they're hedging their bets on some other kind of things. And it's not that they already have, like Sam mentioned, they're also going with companies like Oracle, like CoreWeave. So they continue to spend even more and more and more. And this market is really constrained at the space.
It really is. And then you have IREN, which is it's going basically from a miner to basically empire AI infrastructure, and now it's AI cloud space. And you could already tell that these guys, and I'm not just saying these guys in terms of IREN or Nebius or Microsoft, but it just in general is that they foresee a lot of demand coming up in the near term. You already saw I forgot the name of the company that did the research, Semi Insider or something, but they say that Amazon basically signing up for more data center expansion when it comes to Anthropic data centers specifically geared for Anthropic is going to contribute 20% plus growth rate, which would be a reacceleration for AWS. And that's already a $120 billion run rate. So 20% on top of that guided for the next couple of years, dude, you're talking about maybe close to a $200 billion run rate for just their AWS segment alone, which is already a high margin business at what was like 32% operating margins. I mean, these companies are just printing money, and they're taking all that money they're getting and they're reinvesting it right back. Like, they're not stopping. Zuckerberg said at least $600 billion. I mean, I don't know how valid that is, but you know, he did make that joke off mic after it, but then he reinstated saying that was the low end of the range. I mean, it's just, guys, where's the top here? Like, obviously the spending will slow down at some point, right? I'm not saying that the market's going to go down when that slows down, because I do think that that'll be the point where they stop spending so much and they focus more on profitability and finding the return on it. But at the same time, they're accelerating spending, right? Like, this isn't like they're slowing down or there's like a hint of it slowing down. They're accelerating, and now it's no longer focusing on data center spend domestically, but it's data center spend on a sovereign basis where you have them expanding. Jensen Huang's visiting the UK with Trump next week. What do you think? They're just going to talk about shenanigans? No, they're going to talk about expanding the footprint and spending abroad into Europe. And then on top of that, we already got the license secured for the H20s going to China, which obviously was already baked into the market.
Also, I like this CEO, bro. Like, this CEO, he's on Twitter. He doesn't really care what anyone thinks. He likes doing podcasts. And I like how he thinks about just like being a leader in the market. By the way, folks, I got a third guy who has been calling Nebius for a while. Ladies and gentlemen.
Neil.
Oh, of course.
I knew it. He's been talking about Nebius since before I did, you know, and props to you, man. You probably were too, Jose, but I want to give him the credit for that I'm not like the Nebius guy, you know, but I mean, all of us have
definitely
really
been talking before all of us here.
Yeah, Neil, you got a lot of background on your.
Wait. I was about to go to sleep, but
he's just printing money.
I was about to
amateur.
I was about to go to sleep, and then he's like, "Bing." No sleep for me.
You're not
now.
sleeping tonight, man. You're not sleeping
Dude,
tonight.
Neil, what is your take, bro? 20 billion, 5 years? What's going on here?
I mean, it's insane. I mean, I have been following Nebius since January, so a while. we knew from more recently that deals were about to come. I did not expect a 17.4 billion 5-year deal to come from Microsoft right now. And they said, the CEO basically said, I'm happy to announce the first of these contracts. There are more to come. During the call, they teased us a little bit, but it seems like, Nebius is walking the walk. And after all of the posts that I've seen about, who needs software, bare metal is good enough, they were late, Data One was late, blah, blah, blah. Feels good, man. Feels good. And although it did, I don't know, how is it still up 60%, now 40, a bit less. Okay, 44%.
Neil, quick
just
question.
44.
Do you think this is, I personally think this is going to be more like a bare metal deal for them. I don't think Microsoft is going to be buying any form of like software stack on top of them. Do you feel the same way here for Nebius? On this deal alone, at least?
Yeah, on this thing, I think, yeah, but there are, this would allow them to just, and they say this allows them to basically accelerate growth next year, grow even faster. So it will have an impact on the software side of their business. Maybe not for Microsoft, but for the Cloudflares, the Shopifys, and whatever else enterprise they do sign up along the way. So, Nebius was worth, what was it, $16 billion, $15 billion at the close? 15? This is worth more than the whole of Nebius.
Yeah. I know, that's pretty insane.
Not bad.
Yeah, not to mention that they already guided for EBITDA profitability, I believe, by next year. So this pushes it. I don't know exactly how that financial is going to work, but like I think it's going to really push it up further. There's a little bit of feedback actually.
Yeah. Okay, so let's kind of dive a little bit more into the stock news right here. Neil, let's ask you this question because I know you dive very deep into valuation. It's up 40%. It's $15 billion company up 40%. It's going to be getting about $3 billion a year from Microsoft. How are you thinking of the valuation? Does it deserve this? Like, is this actually undervalued even at 100? What do you think is going on?
The deal is worth more than the whole company at the close. So is it worth? It's not up double. It's up now 40%, 44%. I could even make the case, and I think Sam and some others had some write-ups on X as to how Nebius at $65 per share was undervalued. If you take into consideration 28% of ClickHouse and how much that can grow in when that will go public, that's probably going to be a big business. AV Right, Toloka, Triple 10, and all of that. You put all of that together, and you add, of course, the core cloud business. Probably you're getting $20 billion, if not more, of fair value today. Now you're getting a $17.4 billion 5-year deal, which is a bit above $3 billion a year from Microsoft. Is this jump too much? I don't think so. I surely do hope that tomorrow we're up only 20% because I will be buying for sure. I bought when they reported earnings and the stock jumped right after. I said, this is probably one of the only places where I have zero issues averaging up. I think we did. When we bought Palantir at $12, I don't think we stopped buying Palantir at 20, 40, or 50. I jumped out a bit too early, but I think most of the Palantir holders did average up along the way because the company continued to do very well. And so I secretly hope that tomorrow we open up only 20%, 30% tops. Maybe we might get a little inflation report help on Wednesday or Thursday, and that might maybe drop the whole market. But no, if it were at $93 without this deal, I would say, okay, maybe we're a bit stretched right now. But adding an extra Nebius in contracts,
it's incredible. It is just incredible.
And
Jose,
Sam made some great points about kind of like all these cloud service providers investing more in CapEx. Oracle has about $140 billion in RPO for their cloud server business. Amazon, Microsoft, and Google all shared the numbers, and they're all in the hundreds of billions of dollars. I think Microsoft, I forget who was closer to $300 billion in kind of like RPO they still have to match or me. And that customer wants that AI infrastructure as quickly as possible. So for them, building $4 billion a year, let's say that 5 billion for the next that 20 billion or so for the next 5 years is about 4 billion. For them to build more AI infrastructure to meet up with that RPO that they have lined up for cloud, it's a no-brainer for them. They just need to continue to find more partners like this. And this is why I think it's great to listen to the earnings calls of the top players, because they tell you, look, this is how much AI infrastructure customers we have right now. We need to get more compute to be able to serve them.
Sam, you think we're close to topping out on this AI bubble, or how are you thinking of those concerns?
No, I don't think we're close. I think it's going to be scary during it. Like we just saw a 20% drawdown, 23% drawdown intraday in the market in April. I think that there's going to be a lot more of those to come. I don't know if it's going to be 23%. You'd have to have a dramatic macro event for that to happen. But the market has become somewhat resilient. So maybe 10%, but we could easily rally another 10% and then pull back 10%. The bears who are hoping for that 10% correction today will have no choice what to buy later on. Or like, how do you know when to buy? Like, it's so difficult. The stocks in space that they do every single day on Twitter, I went on a total rampage on there, just so sick of people saying for a bear market correction, whatever. Like we just had a 23% intraday correction last April, right? And then if we get 10% down from here, don't tell me that you bought in April and you sold today and you're hoping for a 10% to get back in. No, you mofos didn't buy in April, so you want to pull back so you don't have to buy the top, right? And it's just dude, Nebius was never a swing for me, okay? It's been a long-term play for quite some time, and I sized it correctly. I wished I sized more because this position is now if the stock is up 50% tomorrow, it's going to be a 15% position. And dude, I'm the oldest one here.
15% of your portfolio?
Yes.
Wow.
Yeah, it's going to be 15% of my port if it opens up where it is right now, right? So I am not a risky person when it comes to the market. I size this at a 3% position when I opened it, and that was around $25. And we're nearly 4 times since there, right? So that's 12 to 15% and so on. I've traded options on it too. I've never sold covered calls on it, or if I did, I quickly got out of it for a short-term play. It's one of those stocks. It's like Hood. I'm scared to sell a covered call on it because I don't know what's going to happen in the market, right? With my core positions in my portfolio that I'm really bullish on long term, I'm not looking to sell premium on it. I'm looking to add to the position. Nebius, I did get that opportunity in the 30s, but I clearly have averaging up is very difficult for me to do. I'm 30 years old. I got kids, house, and everything. I can't be let me just go in more, right? I size it initially and I let it ride, and I see this and I'm yeah, if it pulls back. I was just joking with Neil the other day. I was when we saw when we saw Arcady, who's the CEO, he sold 10% of his shares, and everyone got people just got bearish. This is it. This is the top, right? Dude, we're 40% higher from where we were before. And I was I hope it goes down because then I'll buy more. But if it goes up, I'll make money, right? You look at it today, is this a top? I don't care if this is the top, because I know that the way this company and management has prepared it from when it was in its Yandex days, that they know what they're doing when it comes to building and rapidly expanding data center at scale and serving customers in all verticals on all fronts, running multiple companies. They know how to position themselves. Why would you say this is the top right here? Because clearly it might not be the top as people thought it was today, and it could run more. But on top of that, this story is just too interesting to just sell here. I don't, unless you're a trader, selling here is just so difficult to do. You would essentially be trading the position if that was the case. But if you're a fundamental long-term investor, why would you sell here? Why would you sell your whole position? Trim, whatever, fine. But to be cutting yourself out in the thesis that I feel is still starting. Like Neil was saying, this multi-year deal has room for the upside too, because 17.4 is it right now. We didn't know this before today. So this could be double.
Well, the CEO said 20 billion. So there's another 3 billion they could 2.5 billion they could achieve as well.
Yeah. So you asked me, I was going to say that.
Okay.
So Arcadia. I forget. I forgot how to pronounce his name. But the guy you said Roman before, he's actually the chief business officer, but he's been up there since the beginning anyway. But I mean, like, what if he sold part of his stake because he made so much money and he's been with the company for a while and he just like needs to pay taxes and stuff? Like, it's to support his living and lifestyle, right? Like, still 10%. But like, what if he also has some ventures he wants to get in on too? Right? Like, he wants to have some liquidity to be able to put in his ventures because he's obviously very extremely bullish AI. Right? He can do whatever he wants with his money, and I don't.
Let me ask Neil the same question. Neil, are you getting scared about the toppiness? I know, we got some crypto treasury stuff going on, but at least when it comes to AI capex, how are you thinking of the broader market and froth, but also this AI trade?
Yeah, I mean, the crypto treasury stuff, I do want to have a conversation with you about, especially this thing of today. That was something else. I mean, what was a 50x return in 10 hours?
Oh, no, it went down to 30x by the end of the day. That's okay.
Only 30x. I hope we can. I hope they can buy a Happy Meal. But I don't see. There are definitely some stocks that can top and that will probably pop. Those that really have zero business, like there are billion-dollar companies that still generate zero revenue today, might generate some revenue next year or in the next 5 years. Okay, then yeah, they might fall. But Nebius, for example, I'm not selling a single share tomorrow or the day after. Like I said before, I might even add if we do not open up that much. But no, the AI story.
You don't think capex in AI is topping? Like, you don't think the hyperscalers are going to stop? Like, do you think they're
going to stop or they're going to slow?
They're going to slow down. Yeah. Do you think capex growth significantly slows down over the next couple of years?
Slows down growth?
Because Jensen is saying it's going to be 4 trillion by 2030, which is not slowing down.
Yeah, but it's 4 trillion not in 1 year. It's 4 trillion up until. So yeah. I think I've seen Beth Kindig say that IDC said that capex for the big boys is going to increase around 21% next year over year. Still something, no? And again, people forget this is I think it was $421 billion in capex for only 4 companies. Only 4 companies around the world. You're going to tell me that no country is investing in AI? Exactly this one. This one?
Yeah.
No, there is there. She made another post with Amazon and then whatever in the thing. She said that that's going to grow to $400 and something billion or so next year. But again, we're only talking about the 4 big companies. We're not talking about all of the other smaller companies. We're not talking about the countries that are investing hundreds of billions of dollars probably. Yeah, this number right here. So yes, maybe capex, not maybe. Capex is definitely not expected to grow as fast as before. But as I keep saying with Jose also, we're only 2.5 years in. Don't forget that 2.5 years ago, there was no ChatGPT in our life. Only 2.5 years. Building out huge infrastructures takes more than a day, more than a month, more than a quarter. It takes a while. Like all of these companies, Oracle with their $130 billion in backlog or whatever, it is not going to be spent in a day. You can stretch it out for so many years. And so, yes, maybe capex growth will not double like it did before. But these companies are still expected to spend hundreds of billions of dollars each and every year for the foreseeable future. And something Jose said this morning, we're not even talking about agentic AI yet or robotics, humanoid robots. That's coming. And so, yeah, I don't know. Last week we've had like this Seaport or C whatever 1.5-star analyst come out with a AMD note and say that Meta and Microsoft are reevaluating their AI spend. Man, what are you even talking about? Zuck basically put out like a $600 billion number in the White House, and he even said that's going to be more than that. Microsoft just here signed a $17.4 billion deal, like it's nothing. And so, no, I don't think we are near the AI top for the market.
Yeah, I do want to say, and I've talked to Neil about this, is AI infrastructure is expensive, and the way this dealing works is a little bit weird. So I know a lot of Nebius bulls have talked about the great balance sheet that NBIS has. It was pretty much clean till last quarter, right? I think this quarter it jumped almost to $1 billion. I think when the deal like this, you're also going to continue to see that balance sheet, I wouldn't say get weaker, but you're going to see the debt grow a little bit, because what ends up happening is very similar to a lot of these big players. When they sign a big deal like this, they get a small pre-initial fee at first, or some prepayment at first. They use that prepayment to build these massive AI infrastructures, to buy these massive GPUs, and that increases dramatically. But as long as you know you have that 5-year bill, 5-year recurring revenue, that kind of has a backing to it. So I know there's a lot of NBIS shareholders that see that balance sheet as kind of like an ultimate bullish thesis. I'm just going to say, be prepared to see it maybe transform a little bit into more higher debt than it has had in the past. But I wouldn't say be scared of it. I think it just comes with this overall AI infrastructure market. So if next quarter or the quarter after that, you see massive growth in debt, I wouldn't say it's necessarily a bearish thesis.
Yeah, we've talked about that with CoreWeave as well, right? Okay, CoreWeave, more debt, etc., etc. But CoreWeave keeps on saying, like, the reason why we're building and why we're moving this fast is because of the contracts that we're getting. They're not building out for the sake of building out. They have this business plan, this business model in place in order not to overbuild. Our CoreWeave and Iron and all of these players, they're probably up after hours, right?
Yeah, I think they were all nearly like 5% up after hours right now. And we have Oracle earnings tomorrow, which is also another big AI infrastructure. So if we get more good news tomorrow, I think this is going to be a pretty great week. But hopefully I didn't just jinx it.
You didn't just Jensen it. Nice. I didn't just Jensen it. No, man, I'm sure you're good. Did you? I might have missed that. You said because Iron is up 8% right now. That's a speculative position I have, which is not as speculative as I thought. So I might be adding to, because I want to build that one bigger. Took a closer look at their financials, and I'm not sure if just that one quarter was a one-off for the profitability. So I might be adding to that position. It was actually really interesting because I did a post on how you have a lot of miners or ex-miners for Bitcoin basically turning into HPC computing centers or AI infrastructure data centers and so on. Iron is one of them, but then you also have, what was the name of that company? Cypher. Cypher is also turning into one as well, but they're more focused on HPC computing. But basically, they're taking their entire stack, because these miners, they have a lot of existing infrastructure that they use to basically mine more Bitcoin. And they see more return on basically renting out their compute or using their compute for AI queries in order to basically make more money off of that. And they already have energy leased, or they're built in strategic areas where energy isn't quite as expensive, which makes them more formidable players that have existing infrastructure for AI compute. So you're talking about instant access to demand. Like, take example for how Google has a stake in Wolf. Not Wolfspeed. Wolfspeed is actually up after hours too by like 60%. TeraWolf, yeah. It's funny because I think people think WOLF is a ticker for WULF, and they're actually bidding that up. Meanwhile, Wolfspeed is actually a semiconductor play on EVs, and it's like they're not the same thing, dude. One of them is like a company that
bankruptcy
reported,
again?
Yeah, I know they filed bankruptcy twice. Completely different company. That's on the Google. But anyways, it's actually pretty interesting seeing that happen. What's even more interesting is that Navitas, which is also in the semiconductor space, but they focus more on GaN technologies, but they did sign a new power deal with NVIDIA that was announced, and the stock went from like $2 to $5. And it's actually pulled back considerably when it was at like $9, almost $10 just the other week. So that's another interesting, but that's more of a speculative play as well, because like they're not profitable, they're burning cash and everything, but they just got like NVIDIA as like a part or whatever. I would say out of all of these, Iron is probably the most interesting one in the miner space. Obviously, Cypher is one of them too. But the one that I've done the most research on that's more applicable to my needs in terms of like widening out the infrastructure bet for myself. I have Amazon, of course, which is one of my largest positions. It's kind of scary because coming into this year, Amazon was 15% of portfolio and Nebius was 3% of portfolio. And like now they're both the same size. And like that, dude, that is scary. This is scary for my portfolio because I'm not used to seeing these huge swings in my portfolio. I've been mostly a mega cap concentrated person, and putting like small bets. People are like, hey, why are you only putting like 2 or 3%? Doesn't think, well, 2 or 3% becomes a big position when you get in early.
Why are you scared?
Because I'm not really like scared, but like I'm not used to seeing massive volatility in my portfolio because 8 months ago that was not the case. I mean, I'm not like scared like, oh, the market's gonna drop like 30%. Just like, whoa, that's a big figure in the portfolio to be moving. But happy at the same time. So like scared happy, right? And nothing's ever fulfilling if it's not a little bit scary. So anyways, no, there's some interesting.
Do you think like CleanSpark, Marathon, all these companies are going to say we don't give a shit about Bitcoin mining anymore and pivot? Do you think that's?
I don't think Mara will per se, because they are more. There are, instead of there was a point where they were selling a lot of Bitcoin after they were mining them, but then rather they're just adding to their balance sheet, just holding on to them. So I think they're becoming more of like a Bitcoin treasury play. So that way their companies actually start to flatten out in terms of volatility. At least that's what Mara, I think, is doing. I don't think they're going to jump into that sector because I think the companies that are going to do that have already jump started that. You had Core Scientific doing that with CoreWeave. And then, like I said, Iron. And then there's also Wolf, like I mentioned earlier, and there's Cypher and so on. There's a couple of other players as well. But this, what we're seeing in the market right now is like the mega caps essentially, I don't want to say flat, but like not outperforming the smaller caps, right? And you have these smaller players really just getting the better benefit of the broadening out of the market. Because now, instead of NVIDIA running 10 times, you have Iron basically running at 10 times in the last 6 months. Or maybe you have Nebius based like 4 or 5 times in the last few months, right? And those are like secondary proxies to the AI bet. And they're seeing a lot of upside because all that investment in capital does a marginal move for NVIDIA. But when you think about how much of a move $17 billion is to Nebius versus NVIDIA, that's why Nebius is up 50%. Right, dude, if Microsoft said they're going to give NVIDIA like $17 billion, like NVIDIA wouldn't even budge. Yeah, it wouldn't even do anything. Like you take Nebius, it's like, holy crap. You even see like Wolf, getting the stake from Google. Like there's no wonder these are running. And then you have MP as well, which had that deal with Apple, and the thing ran like 100% a week. Like, dude, these are the plays that are hot right now in the market. And you don't need to put that much capital in these plays to make a lot of money. You just need to have patience and do your due diligence ahead of time to make that small bet and just let it run, right? Like, yeah, I mean, I would like to add more Nebius right now, but if Nebius pulls back to $60, then I said the other week that I'll add in 50. Like I'll probably add to it, but it's like, dude, there's probably a lot of really good plays out there that Wall Street hasn't figured out yet, that a lot of retailers have. Right?
And Sam mentioned a few, Sam. I don't know if anybody saw 3 weeks ago. I did a video of 15 secret AI stocks, and they're all miners. So there's at least 15 miners out right now that are kind of doing these AI transformation. Some are good, some are bad, but I covered in like a 10-minute video 15 of them. So there's a whole market here. You just have to be careful on which ones you enter, obviously, because some might take a little longer. Building AI infrastructure is not just as easy as building kind of like the mining facility. And if they're transforming, you have kind of some business risk with the transformation of a completely business. But there's a lot of small players that can kind of benefit from it, like Sam was mentioning.
It's so funny how it's like I'm sitting over here, I'm like, oh wow, I'm up so much in Nebius, and I see like people saying they're up like 100K after us. I'm just like,
dude, there's one screenshot from guys up 2 million.
Like, I mean, commission cut? Like, nah, I'm just kidding around. But I'm happy for you all. I'm honestly not going to take all the credit for it, and I don't even think I should take any credit for people making money off it because I didn't hit the buy button. You did, right? So you all hit the buy button when you bought Palantir. You all hit the buy button when you bought Hood. You all hit the buy button when you hit Google, whatever it was. You guys hit the buy button. All we did was just entertain, right? That's all we did. We're not managing your money. We're just entertaining, right? Not financial advice, whatever. But like, This is where retail stands out because you can do that. If you manage a fund of $100 million, you can't buy 5% of portfolio in NBIS without getting the SEC to come at you, right? Oh, that's dope, dude. 100% NBIS. That is true conviction.
I was talking to a hedge fund manager the other day that they have a lot of hood, but like they can never be up more than 15% a year because they're always hedged. Retail doesn't have to be a hedge fund manager, right? Even if you have a decent sized portfolio, you can go long and let it run. And that's when people say they're up 200, 300% this year. Like that's not easy to do, but it's believable on good names, especially if they use a little bit of leverage with some call options that can really juice it up. But like, even if you just own NBIS from 20, you're up 400%. Boom. There's your year. There's your portfolio.
Yeah. A lot of hedge fund managers, they can't have their portfolio allocated more than 5% in a single company. Like that's just like a rule. And that's how I operate my portfolio with initial size, but I'm not running a hedge fund. I'm running my own portfolio, my own money. So I can let NBIS run, right? I don't need to be like, oh, it's 5%, then all the portfolio requirements, compliance, I got to bring it down. Then all my, we don't need to worry about that. No one's calling you up when NBIS is up this high. I was like, I want to lower my risk profile because this is not what I signed up for. Sell some NBIS. Yeah. It's like, you don't need to worry about that, guys. You can let the thing run.
Okay, so last question for you guys. You think this thing dumps tomorrow? It keeps going? Jose, we'll start with you. What do you think happens tomorrow?
I think the market is going to wait a lot till Oracle earnings to see if this AI infrastructure story continues. So I'm going to be more interesting to see what Oracle produces, and I think that can continue to drive the momentum in this space. Maybe in a small pullback, but I think we're going to be more cautious for Oracle earnings, which I think, are they tomorrow? Am I getting my days correct? So yeah, if they report great RPO numbers, I think we can see another continued run up on this AI infrastructure build out play.
Neil, your thoughts?
I mean, I hope it pulls back. I really hope it does pull back enough tomorrow for most of us if we want to add more shares. I mean, why wouldn't you want this thing to pull back a little bit? I am extremely happy with the performance of my position, but we're still far away from the end game in there. And I mean, the CEO basically said it black on white. This is the first of future contracts, and more are underway. Of course, they start off with the Microsoft one, which is a pretty big deal. But yeah, we're still early, and tomorrow, we have Oracle, we have, I think, Synopsys, we have Rubrik. I think, Sam, you follow Rubrik a little bit? Cybersecurity name.
Yeah, no, that's a pretty decent sized position of mine. Looking forward to that one. Another long-term story. It's beautiful. The running into earnings, because they grew at like 40% last quarter. Going to earnings, they're about trading at an EV to NTM sales of about 14, 15. Actually, I think it's more than 15 now because they're at like 10% in the last few days. So they're running pretty hot, but they are, if they close around $100, that would put them in the same spot they were trading at during the last earnings, which they pulled back like 15%. So, we'll see, but I'm expecting, for me, maybe I'm a little optimistic. I think the troubling part of a lot of people say with this company, of course, is SBC for software companies, but also seeing that their free cash flow or adjusted EBITDA guide, I think is actually going to come up closer than people expect. And I think the stock is going to run further. Regardless, it doesn't matter where it goes. This is another stock where I hope it pulls back as well, so I can add more to it. I was thinking we're going to visit the $70 range, but it, obviously went the other direction there, which I'm just fine with too. When's
tomorrow's the lockup expiring?
I think it already expired because it's been more than 6 months. They IPO'd in May of 2024, so there was more than enough time. In fact, they actually did do a dilution. I think it was after last quarter, or I think it was during the quarter. I forget. The stock pulled back, of course, but
are any of you guys selling or trimming at all tomorrow? And put in the chat too. Is anyone trimming their NBIS? I mean, 40% is. I mean, dude, that's people might want to trim.
Yeah, no, of course. I mean, if people bought at 20 and now you're 100% exposure is NBIS, then yeah, of course. I mean, trim it. Why wouldn't you? You just remove a bit of money off the table. But I am not 100% in NBIS, so I don't see why I should trim. I do have some CoreWeave, thanks to Jose. I do have some iron as well, but I have zero plans on on trimming any of these names because we're only going to go up from here.
Yeah.
Question is how much and how long it's going to take until all of these infrastructure build-outs are completed, because they're of course not going to happen overnight or next week or next quarter. This is still like a 2-year type of thing probably.
And I would just caution people too. I feel like sometimes people get jealous or envious and say like, oh, look, I bought Iron or CoreWeave or these other players and they didn't announce this, and then they might try to switch off. I think for this whole market, something like this is going to be coming. And that's why for the patient investor, it's definitely going to be a good time. Certain times you're going to see more contracts for one company, but I would say I would be hesitant to trade off one of these miners for another just because they just got a new deal. Because I do think for any of those other AI players, so I know sometimes it sucks seeing the one you pick not win, but I think the time is coming for a lot of these players as well.
Agreed. All right. Not bad. This is pretty cool, dude. All three of you have been calling this name along with MVC investing on X.
Yeah, man.
Incredible.
Get him up. We got to get him up here because that, if
It's
I
like
recall,
what, 2 p.m. where he lives or something?
I don't know, but if I
Same
recall,
time
it's
as
a-
me, it's midnight. But
Okay, we got to
I
get him
highly
on.
doubt he can sleep as well.
Yeah, this is incredible. All right, congrats everybody. Jose's, Sam's, and Neil's Twitters and YouTubes I am linking in the chat and in the description, so please make sure to follow all of them. While I'm doing that, just real quick prediction from you guys: Oracle pump or dump? Neil, what do you think tomorrow?
Ooh, I had this conversation with Jose this morning. I mean, Oracle pump or dump? I'd say false. I think it falls just because it went up too much. But good numbers, but it falls.
I will say for them to get a pump, I think they need a Broadcom type of quarter where Broadcom was at all-time
Yes.
highs. Then it got this 10 billion, and then it went to 350. Like Oracle's basically at all-time highs. I think for them to break 270-ish, which would be like 10, 20, like they really got to announce something we're not expecting, and I don't know if they will.
But I think we already got that not that long ago with that fiscal year 28 thing.
Yes. Yeah.
Which is why I say good quarter, but false.
Jose, pump or dump?
Good quarter, staying flat, unless, like you mentioned, they have to talk a little bit more about some of these projects that they're announcing. They still haven't really seen too much on their RPO with the Stargate. If they finally give us the Stargate numbers on the RPO and it's some crazy billion-dollar growth, then that's a bump. But if not, I still expect a good quarter and just pretty much neutral from where it's at right now.
All right, Sam, Oracle, pump or dump? What do you think?
I think it's gonna pump only because last quarter they guided for total cloud sales above 40% year over year and 70% for cloud infrastructure. We've only been hearing more infrastructure deals coming through. So if they guide up on that, I think it might be flat to up.
Got it. All right, folks. Thank you, Jose, Sam, and Neil. All their Twitters and YouTubes in the chat and linked in the description. Really appreciate you guys coming after hours to discuss a massive move. So thank you guys. I'll see you next time. All right. Peace. Okay, folks. There we go. What a move after hours. Again, congratulations to everybody in this name. Robinhood as well after hours, 117.36. There you go. Nebius down a little bit from the highs of 107, but 89.76 still up basically 40% after hours. It's not too bad. Not too bad at all. So, dude, it's real. It's not going anywhere. It feels very real. 54% of you say Oracle will pump tomorrow. Oracle right there, 240. That's actually up a little bit after hours. Is at 238, so that's up about 3%. Probably moving potentially on this Nebius deal. MSFT, Microsoft, 499. CoreWeave's up a little bit, but Nebius is the story, up about 40% after hours. All right, folks, that's it for me. There will not be a market open or close tomorrow. I will be taking a flight at like 6 a.m. Tomorrow morning to Vegas. I will see anyone who is in Vegas at the Robinhood event. Should be very exciting to see people that are there. So Wednesday, market open. Tuesday, tomorrow, no open, no close. Thursday, probably nothing either. And then Friday, maybe the close.
So Wednesday will be the day I'll be back in the morning. I'll wake up at 5:45. I'll try to get Tanner up, but Tanner's a beauty pageant queen about his sleep, so it's going to be hard to wake him up. But yeah, I'm not going to be able to stream Oracle earnings, so I'll keep track of what's happening. But I will be kind of live tweeting Robinhood's event. So if you follow me on Twitter, I'll be able to kind of post whatever's happening at Vegas, and hopefully get to see anyone who's there as well, and get to talk to you guys as well. Did you decide on who the little spoon is yet? Not yet. Not yet. Also, but I'll be back tonight, 9:30 Eastern. We'll have a stream with Tanner and Roy. We'll have a lot. It's basically our Robinhood Weekly instead of calling it Robinhood Weekly. So we'll have a lot to talk about S&P 500, and then we'll get into all this AI CapEx stuff, Broadcom, NVIDIA, and we'll keep going from there. Dude, I know the past 2 weeks has been weird with the stream schedule. It's just been a lot of events and traveling, but after this one, we're going to be back and get into our routine. And I'm really happy you guys say the audio is good. I think Doug said the audio is indistinguishable from my parents' house, which is really good because the audio there was like perfect. So that's good. I'm happy the audio is like getting a lot better. I think it's going to sound even better once I finish sound. Like there's a bunch of these foams squares on the wall, but there's like 50% of it that still needs to be done. So it should be even better. Siege, thank you for the $20 super chat. Bring that vintage piece of Las Vegas history with you. Have fun. Thanks. That is going to be very fun to bring. That's the Las Vegas Sands coin that Jason gave me at the Miami meetup. So definitely will bring that, and we should have a good time. Desi says, enjoy Vegas, behave. I'm not going to get into too much trouble at Vegas. I think we're going for a dinner Tuesday night, but outside of that, like dude, there's not even enough time, bro. Because like the whole day is stacked with events and schedules and podcasts, and then Wednesday is the same thing. So like it's not even one of those trips where you can like really go crazy. So we'll be back in a day and a half, and then we're done. But should be fun. It should be fun, dude. This is crazy. This move on Nebius, like first of all, Hood, great day. If you're in Hood and Nebius, it's got to be a really great day. But then to see this move after hours, which just continues to validate what's going on in AI and data centers, it's fun, bro. It's really, really fun. I recommend watching Jose for the market open. I don't know who does a close, but Jose and Couch do a market open every day. I'm looking at his channel in the chat, so you can subscribe to that. And yeah, they will be at least doing, I think, like an hour and a half in the morning. Tanner's not going to go live, bro. Bro, Tanner, dude, I'm getting to the airport like 3 hours before him. So I'm going to be waiting at the airport for him. I don't know why I picked a flight this early. I don't know what I was thinking. I did not need to come this early, but whatever. I'm happy to just get the flight over with and be there. So yeah, I will see Tanner and Roy tomorrow, and we'll see what goes on. We'll see what Robinhood can announce, and if they can announce something exciting, then, you know, maybe the stock continues to get some momentum from what's going on as well. Dude, I think I need to make a new Instagram so I can do like story updates. I don't have an Instagram. I mean, I have one, but I don't use it. I think I'm going to make a new Instagram so I can like show behind the scenes of my life. But I don't know, dude. Just posting on Instagram just feels like, it's just like, it's like I think of Twitter not as a fun platform for like posting fun stuff. Like I post some fun stuff here and there, but I think of it as like a communication platform around the news, which means there's a lot of work I put into posting the content that I think would be valuable for an audience. Whereas Instagram is just like random shit, right? And I haven't posted random shit for like years, like not since I was in high school. So it's like, but I want to do more of that. So this is more human stuff, you know? So I want to see if I can do that as well in the future. All right, cool. That is it. Thank you, everybody. Oh, real quick, let me answer some of these super chats as well. So someone said right here, Nathan says, I have $68 covered calls expiring this Friday. How should I deal with this situation? Okay, so a couple things here. Number one, I would roll them soon, right? AKA before Friday. You're probably gonna have to roll a year out. So when you're at 68 and you're this deep in the money, you're probably gonna have to roll to like January 2027, maybe like mid 2026, end of 2026. And you can probably roll from 68. I think you can probably get into the 90s or in the hundreds based on how far you go. And then you just have to be okay with waiting, right? So if you go from 68 to 100 by, call it June of 2026, and then Nebius gets to 120 by June of 2026, two scenarios. A, you can wait until then and then roll again for like June of 2027 and try to get to 120, 130. So you're kind of be playing this game of catch up. Or B, you got to tell yourself, all right, I was okay with selling at 68. I'm definitely okay with selling at 100. Yes, the stock is $20 higher and I missed out on some of that upside, but I have $31, $32 of upside from 100 to 68, right? So you kind of have to be okay with the given, the push and pull of like where you want to ultimately sell it. Now, if you're really nervous and you think Nebius is going to like 200, you can go to like December 2027, 2 years out, and really roll it and say, I don't think the stock's going to go to 210 or 215 by December 2027, which would be a double from here, which would be incredible. Maybe it happens, maybe it doesn't, but you can give yourself a lot of time. The key mental model here, and this is something that Adam talks about a lot as well, is do you actually care about the shares? Do you care about this investment? Do you want to keep the shares? Because if you do, the premium that you are generating from these covered calls is irrelevant versus like keeping the shares. So if you want to keep the shares, then you might be upset that you can't continuously do like weekly or monthly covered calls. But even if you roll for a net credit of like $1 or like a net debit, maybe you have to pay like a couple $100, which is nothing in the grand scheme of how big your position may be, to wait a couple years, but your price goes from 68 to 200 or 68 to 175, then keeping the shares is what matters more than anything. So that would be my strategy here. Now, the other thing is, what if this Nebius pump doesn't last? What if JPAL gets a little raunchy? What if FOMC is not that good? What if we get a little bit of a macro sell-off? Then you might want to wait until you roll it. Now, obviously, you definitely need to roll it tomorrow because unless it goes back to 68, it'll be underwater. But maybe you roll for a couple months to like 80 and say, look, I'm going to keep this covered call underwater until December because I don't think Nebius deserves to be 90. I think it deserves to be 80. And then as it dips, you can then get out of that covered call. But given the nature of the deal that we just spent an hour analyzing, adding their entire market cap after hours in a 5-year deal, to me feels like this is a justified move. And so I would roll it out probably a year, get to like 150 and just be happy with the gains from 68 to a higher level. So that's kind of how I would navigate the situation. Danger, thank you for becoming a channel member. Appreciate it. Davin, again, thank you for the super chat. The market close literally turned into the Marvel universe of retail AI investors. Thank you for all the great work you do. I mean, this is what I was talking about in the morning, right? This is the coolest part about being in this entire community. It's like these guys, like immediately I called Jose, then Sam texted me, then I saw Couch was in the chat. And then you guys got some content for the past hour from 3 people that know a lot more about Nebius than myself. And then boom, we can kind of crowdsource that information for everybody. And that is the goal of what we do in this community. So thank you for the depression. I will cry myself to sleep and cry tomorrow, all tomorrow. Admit it sucks when you're not consistent. You have to be better. Dude, I think I hate it just as much as you guys do. Like I really do love doing this every single day. But these events, you know, these are my babies, Palantir and Hood, right? These are like the events that I personally do want to be at as well. And so I think the trade-off makes sense for these events, but we should be back to normal in about a week. And then we'll get into our full routine. Is it weird spending almost every day of my life with a MIT for the past 4 or 5 years? No, I mean, I think that's quite frankly, I said this yesterday. I'm going to say it again to end out the stream. I have a pretty sophisticated talent of stealing men from their wives and spending time with me all day. I don't like, it's quite incredible, to be honest. You know, didn't realize I had this talent, but I guess I do. So you join a network of many people that are stolen from their significant others and spend time with the stream. So by the way, I asked Tanner if I could tell you guys about the quirk. We will be revealing Tanner's quirk tonight on the Tech Bros podcast. We will be revealing his quirk. He said, yes, you can tell them. I don't care. I was like, thank goodness, because this shit is hilarious, bro. This shit is hilarious. So my GF agrees. The amount of people that have said this is just, it's crazy. But the context here is that Tanner had us after hours on the podcast last time, and he was like, guys, before we all share an Airbnb, I need to tell you something. And me and Roy thought it was like some serious shit. And then he said it, and we were like, bro, you're a child. And so it's going to be so funny. Maybe some of you guys agree with him. I don't know. But I just thought it was hilarious. And so we'll reveal it tonight on the Tech Bros podcast. So there you go. All right. Love you all. Appreciate it. I'll be back tonight for Tech Bros. We'll be missing Tuesday. We'll be back Wednesday for the market open. I'll be covering what's going on with Hood in Vegas. For those that are in Vegas, I'll see you there. And we will keep going. Congratulations, Hood, S&P 500. Congratulations on Nebius. Incredible stuff. Big win for retail. And we will keep going. Thank you, everybody. Appreciate it. I'll see you guys in a bit. Bye, everyone.